right, welcome back to another stock market stream. Man, we've got some crazy numbers out of Amazon yesterday, although some people don't seem to be as enthusiastic about some of the numbers. They're like, I don't know, they took some fancy charges in there, blah, blah, blah. Everybody's always got something to complain about. But great analysis work this morning in the course member live stream. They did some fantastic fundamental analysis. Just so you know, what we had in the alpha report this morning was bearish on Amazon on this line here, 254, mostly because we thought it was already priced in. In other words, the most was already priced in pre-market. So it's not being bearish Amazon, the company. It's just bearish on the day on Amazon stock. And bullish on Netflix. If you haven't seen Netflix yet here, this was a very, very solid set of bouncing right here. Really fantastic moves here by Netflix. Look at this, 1, 2, 3, 4 bounces, and we're now settling over here at the next line. So pretty exciting. Those were that was some of our work this morning, in addition to some fundamental analysis, as we like to do. So what else is going on today? We've got Bitcoin trying to get back to 110 over here. Tesla's got a little bit of a move. AMD, Nvidia coming back up a little bit. MicroStrategy moving up along with Bitcoin a bit. Question is when is MicroStrategy going to actually really get some enthusiasm again? Because if you look, MicroStrategy has really been crushed since July. And we're coming up on the lowest segment of the fib retracement level here. And then we're going to get into the negative sort of fib extensions to the downside, which there's really only one of those. But this is really quite fascinating that you've got this long-term bleed here. And I think this bleed is exactly why we're starting to see this softness in Bitcoin, because it shows you how important MicroStrategy liquidity is for Bitcoin pricing. If we go to MicroStrategy Investor Relations and we look at their cash flow statement, we'll be able to take a peek here at some of their recent numbers. So if I go, let's see here, cash flow. They don't actually make it very easy to find the investor relations page. Okay, come on. They really don't. All right, fine then. I will go to sec.gov and we'll find it over there. And search MSTR. And no, we don't have a filing from them yet. How interesting. We should. Strategy. Come on, homie. Anyway, we'll let that load. Maybe the SEC is because they're shut down. We can't find it. And we just have a current report from them. Does the current report show cash flow statement? I don't think so. Yeah, doesn't actually show their. Oh wait, here we go. Attached to the bottom. Okay, balance sheet. No cash flow statement. We do have a consolidated statement of cash flows. Here we go. So I have not a lot of details on this because I wanted to see their funding. Like, are they issuing stock or what's going on? See, net cash provided by financing activities, $19 billion raised in the 9 months ended 2025. I would have liked to see a quarterly cash flow statement here, but I have a feeling this is dramatically slowing down recently. And I think because of that slowdown in funding, they've done all these various different entities, the Strife and Strike or whatever, and they're kind of just running out of the ability to borrow. So that's interesting to me. Then we've got, they do actually, let's see here, on their product licenses, $19 million here. I got 45 on subscription services, cost of revenues, total cost of revenues 38. They actually made some good money this quarter. Look at that. Actually made $90 million. That's nice. So, good for them. Okay, good. So, let's now see what we have in the way of news. And then also keeping an eye on the Qs. Netflix, 125. Nice hold of the line right there. It's looking pretty nice. Amazon still in bleed mode here. All right, let's go get All right, let's go get the news and see what we got. So, the Dumas. All right. Magnificent Seven drive stocks to historic rally. Yep, shutdown stalls SEC work on private credit in retirement plans. That's okay. I don't know that we need private credit in retirement plans. Did you see the BlackRock loss that they took? I thought that was really interesting. Let me see if I can find it here. We'll go BlackRock, private credit, bankruptcies. It was like $1 billion charge that they took. And it just says like, hey, there are probably more cockroaches out there. Like another one, insider sale. Let's go to insider sales by Carvana. This one makes me really nervous. So we're going to look at this. But look at this. If you go to Carvana and you just type into Google like insider transactions, right? Look at this. The amount, like if you just look at the Garcias are literally always dumping this stock. And in every single month. There we go. More Garcia. Every single month. Sell. And this has been going on basically forever. It's going on over here as well. Garcia. I mean, and it's every month that they're selling some of the stock. And so I think look at this. This is an insane amount of selling right here. We're talking shares traded. What is this? So gets assigned them, turns around and sells them. Sell. Look at all of this. Get assigned them, sell them. Get assigned them, sell them. Get assigned them, sell them. This has been going on since they moved out of their BK position. And it's really interesting because if you look at the Carvana earnings, so much of it is based on their ability to sell to Drive, which is a related party company owned by the Garcias. And so it creates some really interesting stuff. But let me see if I could get an SEC filing for them, because then we can maybe get some related party. Or honestly, even an annual would be all right. I have a quarterly here I could pull up. And I'll take an annual too, though, because I want to see the related party transactions, because there are a lot of them. Related party, Drive Time Automotive. See, so we know we've got the related party transactions with Drive Time Automotive, but I want to see how many of the financing how many of their financings are coming from Drive Time. Let's see if they mentioned anything in their last quarterly. Office leases, wholesale. Here we go. Drive Time purchases wholesale vehicles. The company recognized $8 million, $3 million wholesale sales revenue from Drive Time. That's fine. But what I care about are the how much money are they getting from the financing receivables, because that's related to this whole private credit disaster, right? That's where it gets scary. Profit sharing agreement. Let me see here. Where are aircraft time sharing? Anyway, related parties, nationwide logistics, retail units, drivers. We want how many of these financing receivables are going to them? Like, who's buying these car loans, right? That's the trick to find. We receive a commission. Let's see, gross profit, drivers, wholesale sales. Okay, wholesale sales and revenues increased by $391 million to $1.2 billion, primarily due to an increase in the number of wholesale units sold. That's fine. But we want to find the financing receivables. Vehicle gross profit drove up. Wholesale, yeah, because they also give financing like instantaneously on the app. The app's really good. I can't find them. That's all right. But anyway, this whole private credit thing is quite interesting to me because it does raise the flag. Let me see if they show them here. Financing. Or let's just type in receivables. Now, receivables aren't even in their statement here. Financing receivables held for sale. Okay, so if I go to their revenue statement, I'll see it. Okay, so retail sales, wholesale revenues, gross profits. Here we go. Cost of sales. Okay, respectively from related parties. Okay, here we go. So the car sales, they don't break down the cost of sales. How funny. Of course not. Because that could be where most of the profit is. That's interesting. I wonder if they break it down in an annual report. So if I go to, is this their 10K? Yeah. Let's go to a revenue statement here. Because the idea is that Carvana may be the perfect example of private credit that's actually public. Because Carvana relies on it, but the private credit ends up at the related party. Gross profit, here we go. Retail vehicle gross profit. Okay, so the gross profit on the cars on the annual basis is 9,681, is 14%. And then look at this. Other sales and revenues, dude. Look at this. 100% margin right here on other sales and revenues. See this? 1.1 billion and gross profit 1.1 billion. So it costs them, they're putting 100% profit through here, which if it weren't for that, where's their bottom line here? Gross profit. I need to get a full income statement. That's interesting to me. Here we go. Net income, $404 million. They'd be losing money hand over fist if it weren't for that. So it's very interesting to me what they're doing with the subprime autos. Somebody says Bridgecrest Financing does a lot of Carvana's financing. Bridgecrest, are they public? Credit. I don't think they're public. Bridgecrest.com, licensed motor vehicle sales finance company. Are they partly owned by the Garcias? Like, are they also a related party? Closely related, loan servicing company, Bridgecrest. So who operates? Bridgecrest, credit, and then look at like, we should look at, what are they called? The executives, right? Drive Time, Bridgecrest, and Silver Rock executive sales team. Wait, are they the same thing? Drive Time, Bridgecrest. Oh, they might be the same thing, just under different brands. Oh. Interesting. Drive Time. There's some big connection between them here. That's interesting. Because somebody says the loan was got. Yeah, I think because they make the app so easy, the strategy with Carvana is you buy and then you go refinance, right? They're all the same company. Bridgecrest, and that's from Drive Time. But yeah, I think you're right that these are all just like different names for the same entity right here. Yes. They are overlapping. I guess technically they're slightly different. Bridgecrest does the loan servicing. Yeah, there's like a tangled web going on over there. There's something interesting, but related to this private credit world. It's not illegal to have like circular financing going on. It's just not sustainable. So there's something funny going on there. Anyway, all right. So Carvana, I think we're still trading near all-time highs, right? I guess we were at 413 here. It's not the biggest surprise to me that as the private credit concerns are starting to circulate, Carvana is slowly coming down. We know they just had earnings. I actually think they beat on their earnings when I remember looking at covering it. But there's something sus there that could be a smoking gun for private credit. Because if private credit dries up on those financing receivables, then the big profit that flows in through Carvana's public stock, which the Garcias dump every single month, dries up. And then the whole cycle ends. So I don't, that makes me nervous. I don't own Carvana, so it doesn't, and it's done very well, obviously, but it's probably because of this. Let me see here. It says, yeah, their adjusted EBITDA beat, their EPS beat, their revenue draw beat, like everything beat. But again, I think people are starting to wake up and say, wait a minute, there could be something weird here about the reliance on subprime and private credit. It's interesting. So we'll have to talk about that. We'll keep an eye on that. Somebody says the upper echelon had an interesting video on them. Okay. Let me go see. Let's see here. And this is Carvana. All right, let's go see. Carvana scam predatory bubble. Well, let's go see what their scam is. Okay. Right now, we're analyzing Carvana, and somebody suggested I go check out this video and react to it and add some color to what's going on, because there might be some unsustainable circular financing going on at Carvana that may at first glance not necessarily be illegal, but it could be the first thing that collapses in this whole private credit disaster we're in. So we're going to react to this video by Upper Echelon, the Carvana scam, a predatory bubble. And it's interesting because it comes at a time where we've seen the collapse of First Brands and Tricolor, which we've covered significantly on the channel, leading to Jamie Dimon suggests that there are cockroaches in the economy, that as they show up, there's usually not just one cockroach, there tend to be more. And then as that warning is being made, remember what I said. I mentioned that companies are going to start analyzing their books really closely, and people are going to start getting more sus about private credit. Well, what's starting to happen? Carvana technically beats on adjusted earnings, on GAAP EPS, on revenue, but the stock dumps 9 to 13%. Interesting. Now, at the same time, BlackRock just announced that they are, quote, ensnared by loans tied to firms accused of fraud. This is another private credit issue. Take a look at this. BlackRock and other creditors are grappling with the fallout from loans made to two telco firms and companies that are now accusing of fraud. Lenders like BlackRock are suing Broadcom Telecom and Bridgevoice, accusing the firms of fabricating accounts receivable fraud that collateral agent lawyers call breathtaking in scope. So in other words, more cockroaches, more accounts receivable fraud, which is exactly the kind of fraud that we saw at First Brands, which is exactly the kind of fraud that the auditor for First Brands failed to uncover and had previously gotten sanctioned for by the PCAOB, saying, you guys failed, we're finding you millions of dollars for in the past, in like 2017, failing to find accounts receivable fraud. They fail again with First Brands, and now we're seeing even BlackRock is losing billions of dollars due to accounts receivable fraud. As you know, we could go through this, but we could see here listing liabilities as much as $1 billion with creditors including BlackRock and other companies. These are big deals. And nobody's really reading these articles because they don't actually make it to the top yet. but the cockroaches are starting to come out of the rugs. It's kind of like somebody stepped on the rug and they killed one cockroach. And they're like, ew, gross, First Brands and Tricolor. But now a bunch more are starting to scurry out the other end of the rug. It's really nasty. And it makes you wonder, how can a company like Carvana have 100% gross profit on other sales and revenues, a lot of which are going to related party entities? Take a look at this. Carvana, on their annual report for 2024, shows us that other sales and revenues brought in $1.1 billion of revenues. Their gross profit on the other segment, $1.15 billion. In other words, zero expenses. So they're making 100% gross profit on the other side of their business, which is the only thing that's really keeping the entire business profitable. Because, if it weren't for that $1.1 billion of total profit that somehow came in, the company in 2024 would have lost money because their net income was only $404 million. So if they're getting this random $1.1 billion injection from somewhere at no expenses, and their net income was 404, if you didn't have that injection, you'd be upside down by $100 million. Same thing for 2023, you'd be upside down. Now, they burned their bondholders a few years ago, and they managed to go straight up since then in the stock market. But what if their move up in the stock market, driven by momentum, is exactly what's exacerbated this cycle? So they burn their bondholders, that leads the stock to go up, which allows who? The Garcias to dump shares, because they've been dumping shares forever. Then what if the Garcias, who own or are related to Drive Time and Bridgecrest, the financing companies, are using their liquidations of stock to funnel money into Drive Time and Bridgecrest to buy out Carvana loans at this 100% profit margin for Carvana, and the cycle works as long as Carvana stock goes up. What it actually means is the private credit cycle might not just affect private companies. It could affect Carvana. They may think, well, is Garcia actually selling shares every single month? Yeah. If you go to NASDAQ market activity and you look at the last 12 months of shares traded, over 75% of the time, you're getting shares sold. And look at Garcia, almost every single month, 10,000 shares, 10,000 shares, 10,000 shares. These are just multiple days here in October of what's already disclosed. Look at all these. Garcia, 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 Garcia. Every single day almost in September, we're selling shares. Every single day almost, every single trading day almost in August, we're selling shares. Selling shares, selling shares, selling shares. Well, maybe he's just wanting to finance his lifestyle as a billionaire, Hey, may as well, right? Sure, maybe. Unless they're using these share sales to prop up the revenues at Carvana, hoping that when they beat on earnings, the stock goes up so they could keep this circular financing going. It's a little Ponzi-esque. Now, we're not saying it's illegal or wrong. We're just saying it raises eyebrows that the income that's coming in from financing receivables at Carvana, which is a public company, which is exactly the same place there's fraud going on with BlackRock, there's fraud going on at Tricolor and First Brands. It is really interesting that Carvana gets this 100% margin injection of financing receivables. See, now people say, oh, well, it's because they have, really high interest rate subprime loans. That's true. The trick with Carvana, people say, is you buy on Carvana, you get your loan on Carvana, and you instantaneously refinance because the rates are so high. This is what people say in the rumor mill, or, if you go on Reddit or whatever, that's sort of the word on the street. And the sales pitch there is, well, Carvana makes it easy for you to get the loan directly through the app. So maybe the loans are just that much more profitable, and they're able to sell those in the private markets for way more of a profit than what you typically see. Well, I haven't watched this video yet, but I'm curious if they're going to dive into any of this But I wanted to start with what I'm seeing going on and kind of where I raise my eyebrows going, okay, this is great in a bull market when everything's going up, but this could be a negative 99% play if private credit starts boiling over and it's a public stock that would be the recipient of this private credit issue, which that's always what you find is people are like, oh, it's just, private credit's not going to affect stocks. It's not going to affect banks. It's a small portion of the market. Meanwhile, when First Brands goes under, you see Jefferies gets destroyed. You see JP Morgan take losses. You see massive banks take losses. I mean, look at Jefferies stock. Jefferies stock tanked after the write-down and loss that they had from First Brands. And you saw a little bit of a recovery, but you're already back on the downtrend. And so obviously we mask a lot of this private credit pain by, what's going on with mega caps in the Mag 7. For example, this morning in the Alpha report, we were really bullish on Netflix over here because of the technicals of what happened yesterday and then the announcement of a stock split. It's now basically straight up on the day. This has been a great trade. So congratulations to everybody in the Alpha report. But with all that said, let's go into what this Carvana scam predatory bubble is, and we'll react to it. We'll see. Maybe they'll say something similar. Maybe they'll say something different. But oftentimes where there's smoke, there's fire. Where there's one cockroach, there are more. So let's see.
Currently, pretty much the entire global economy feels like a propped-up scam. Trillions in corporate value, investor musical chairs.
All right, this is just going to be like an intro monologue, huh? All right, I want to get into Carvana.
Multiple similar cycles with some of the most broken underlying business practices I've ever seen.
Okay.
And some of the most vibrantly waving red flags you can possibly imagine.
Get to the
Obviously,
point.
as per the video title, that company is Carvana, which I believe is a perfect example of what happens when greedy people create a bad business with nowhere to possibly end up other than bankruptcy.
Yeah. I mean, so far, based on what I'm seeing, I agree with this. Like, keep in mind, like I said, if he's going to talk about what I'm talking about, you do not necessarily say this is fraud, right? Like, to take Carvana and to publicly disclose that you're getting all this money from a related party, if that related party wants to overpay for Carvana loans, technically that's not fraud. It's just circular because it means you're taking money from Carvana stock by liquidating Carvana stock. You're overpaying for Carvana receivables, right? So you dump Carvana stock so you have the cash. You use that cash to go buy those receivables at Carvana at a premium, which makes Carvana look more profitable, which makes the stock go up, which gives you the license to go sell more stock, have more money to go keep buying more of those loans. It's not illegal if it's perfectly disclosed like that, which it appears to be, right? It's hiding in plain sight. The problem is the cycle stops if you can't sell shares anymore. If Carvana starts tanking because people get nervous about private credit shares, that tanking will be accelerated by Garcia needing to continue to dump shares. And that's when you'll hit escape velocity. The momentum will go from up to down. Anybody who's in it for the trade, the meme trade from when they burned their bondholders, back at $4 or whatever, they're getting out and you go to zero. So I'm kind of curious to see what they say in this video.
For anyone who isn't aware, Carvana is a used car reseller, sort of, with a near $40 billion valuation. Initially founded in 2012 by a man named Ernest Garcia III as a subsidiary of another company called DriveTime, Carvana has already gone through a complete cycle of bubble, burst, almost bankrupt, and now an even larger bubble.
Right, and they would have, guess who they bailed out in that bankruptcy? Well, the near bankruptcy. Guess who got bailed out, which was shocking, mind you. People were blown away by this because usually shareholders get burned when you're about to go bankrupt. Guess who got burned instead? The bondholders. Guess who won? The shareholders. Mr. Garcia. The cycle, it enabled the cycle.
Again. Just as a brief overview, the company IPO'd at $15 a share.
Okay, I don't care about this
business
crap.
Model is shit. Obviously, we can see that the cycle is now repeating itself.
I know, just tell me what's going on.
CEO of Carvana, Ernest Garcia III,
yes,
as well as pretty much every single other internal executive, but the CEO by far the most of those people.
I like how they used Fintel to show this on one sheet because he just did a lot of scrolling and you could see we're still in October. Like, that's the thing. Like, these people, oh my gosh, he keeps going, dude. Look at this.
has been aggressively selling tens of millions of dollars worth of the company's stock
Yeah.
from a multi-generational trust almost every single calendar day, like clockwork.
Yes, that's the thing. It's because they need to keep the cycle going.
In a vacuum, it doesn't really mean all that much. Never a good sign, but certainly not always bad. Yet, what should the takeaway be when the highest ranking members of a company are only ever selling hundreds of thousands of shares in?
Okay, this is not uncommon. I mean, Jensen's NVIDIA, or NVIDIA's Jensen, I should say. Jensen's NVIDIA. I mean, it may as well be Jensen's NVIDIA. You know, he sells shares too. That's not necessarily a red flag. The red flag is what's going on here, that they're probably selling to prop up the books.
In their own business. Also, the key term to remember for late.
All right, let's keep going here.
Except if you dig deeper, even just a tiny bit
Just get to the
on
point.
the financing page, you can see, quote, 99% approval rate.
Right, because like I was reading on Reddit yesterday, somebody with $2,000 a month of income on like a 700 credit score. They're like, I'm pissed off. I got approved for a loan, but it's 18%. I'm like, bro, how are you getting a loan on a car with $24,000 of annual income? Like, they're giving loans to everyone because it doesn't matter. Like, if you think about it, it doesn't matter if the loan goes bad. All they want is the stock to go up. That's all they want. So they literally move the risk from Carvana to DriveTime or Bridgecrest, which they're all related, we believe. And even if they have losses over there, it doesn't matter because the losses can be offset by all the money they're making from dumping the stock. And so it makes Carvana look like it only goes up and it's the best business model ever.
All credit situations welcome, end quote. That's honestly fantastic.
That's like, by the way, Tricolor. Tricolor, they had a thing where they're like, we don't check credit. You don't even need anything but a passport and a pulse, and we'll give you a loan. And they went bankrupt like overnight.
From a consumer perspective, if you need a vehicle, Carvana is almost certainly willing to sell you one. But now let's look at the details, right? Yeah, it turns out that Carvana's only requirements are that customers be 18 plus, earning at least
earn $5,100 per year. I mean, that's like working part-time at Jamba Juice. That's how much I made when I worked part-time at Jamba Juice.
$5,100 per year, not per month, per year, with no bankruptcies. That's it. Back in 2024, which isn't all that long ago even, it was even lower, by the way. It was just $4,000.
All right, let's go.
Requirements and pricing were the absolute bare minimum.
I'm sorry, I have such little patience. Just get to the point.
Change, but not like 500% or something. But during the same period, on average, almost every other type of default is dramatically down. Home equity, personal.
Right, we know car loans are defaulting more because we have a K-shaped recovery. We know that. It sucks. It really sucks. People want to just get to their damn job. And inflation has made everything so freaking expensive, and wages are not going up at pace. People are getting screwed.
Exactly what Carvana deliberately targets. Now for the fun part. When you use Carvana, taking out a loan for that sweet new vehicle, well, used vehicle in this case, the loan itself is serviced by a company called Bridgecrest.
ServCrest just means they collect the payments, you make the payments to them. This doesn't matter. That doesn't mean they actually hold the loan.
Which is another subsidiary of DriveTime. Just
yes,
like Carvana
correct. DriveTime is owned by the Garcias. There you go. Perfect.
To be. But now we need to clarify ownership. Carvana itself is a publicly traded company, yes, but at the very same time, it also exists as something called a controlled company, because the CEO, Ernest Garcia III, and the CEO's father, Ernest Garcia II, who also owns DriveTime, have majority voting power. And
correct.
Thus, they make all of the actual decisions.
That's okay. Mark Zuckerberg has majority voting power at Meta. That's not necessarily a bad thing. That can sometimes be a good thing because it makes sure a founder's vision can be perpetually promoted through the life of a company. So that's not necessarily a bad thing.
It's a little bit complicated if you break down the entire spider web, but the general point is that Carvana initially began as a subsidiary of DriveTime until it was spun off and IPO'd to the public.
Correct. And so, I mean, really, Carvana doesn't have much risk with these loans, which is a great thing for Carvana because they're just dumping it to the subsidiaries. The thing is, that cycle stops if the owners can't sell Carvana stock anymore because the stock is tanking. So it's all good until it's not. The problem is, if the tank begins, then all of a sudden people's, like, here's the thing. People buy stocks because the chart is going up. Okay, that's human psychology. The chart goes up, people buy the stock. As soon as the chart starts going down, like what you saw in Tesla in 2022, and the insiders are dumping, all of a sudden that dumping accelerates the selling because you don't have new people to buy. You don't have that greater fool buying. That's the biggest risk.
Meanwhile, DriveTime created Bridgecrest way back in 2003 to service their auto loans, and now Bridgecrest also works with Carvana. In essence, the son owns Carvana, the dad owns the company that offers the loans to Carvana customers.
This part doesn't matter. Let's go.
So DriveTime wasn't always called DriveTime. Back in the
I don't
1980s,
care.
and even more notably, during the final years of its run,
This was the burning of the bondholders. We get it.
30th of 2025, 1 quarter later, Carvana had over $2 billion of vehicle assets. If you then go backwards in 2024, you continue to see inventory growth. And yes, fluctuations, wild fluctuations in their inventory.
Of course inventory is going to grow because you guys also have so much damn money because the stock has done very well. So of course the business is going to grow. This is not a surprise.
Do certainly happen. But the last time they experienced a glut of that size, which continued to then grow, was right about the same time they almost went bankrupt.
Okay, making the argument that because inventory is growing, there's the possibility of them going BK again because it's getting harder to sell cars. Look, I do think it's fair to argue that you probably aren't in the best time to try to sell cars to people because it is a hard economic time, especially for folks who just need to get by. But you can always give, you sell monthly payments. That's what you do with cars, right? You sell monthly payments. But I mean, look, he's right. Inventory is rising. You've got vehicle inventory sitting right here, $2.3 billion versus 1.6 last year. So this is not wrong. But the balance sheet is not bad at Carvana. You've got long-term debt of $4.8 billion, but current liabilities, bills due within the next 12 months, are 1.5. They've got more cash than they have bills for the next 12 months. They've got accounts receivable here. We've got inventory. We've got enough money to pay our bills and our debts at Carvana. They've done a very good job actually keeping the Carvana balance sheet good. And to some extent, you want a greater inventory because you want those vehicle sales to grow. Look at vehicle sales growth. This would not be possible if it weren't for more inventory. So that's not the smoking gun here, sir. Upper echelon. They grew car sales by 57%. I don't actually believe that them selling more cars is fraudulent. I think that because they're giving everybody a loan, they're enabling more of these car sales. I have much more concern with these related party transactions, which hopefully this individual actually gets to here at some point in this 14-minute video.
Worth, because cars happen to be a rapidly depreciating asset.
Oh my God, okay.
How far-fetched would it be if Carvana was buying and selling as many cars as they can to people who can't or likely won't pay back these loans?
In fairness, that is how subprime works. If you're a subprime lender, okay, let me just pretend you and I, okay? You and I, we're subprime lenders, okay? Here's how this works. Hey, you know these guys are gonna default, right? Yeah, we know they're gonna default. All right, so here's what we gotta do. We gotta make sure we get all our money back on these loans after they make just 3 payments. So we're gonna sell them the car for 20 grand. That's worth 19. We're gonna make sure we get a $300 profit per month. So that way, we've now made $21,200. And the residual, the residual value is 19K. And so if worst case scenario, we got to go in there and repossess this car, we've got margin after just 3 payments. And then if they go BK, we'll go repossess. We'll assume we're not going to be able to get 10% of them back because, they're going to fight us on the repos or whatever. And so we'll factor that in and we'll make money all the time as long as they make 3 payments. That's roughly, just so you know, how the subprime, I'm, obviously making up some of the numbers here, but that's roughly how the subprime game is played. The goal is to make as much money as possible within the first 3 months because they assume you are going to stop paying at some point. Like if you make your payment for more than 3 months, they're honestly like, ha, sucker. It's a brutal game.
Of them, rapidly inflating their metrics, then offloading the debt or even excess inventory, perhaps, on Bridgecrest and DriveTime. The father and the son continue to make billions of dollars by just perpetually dumping their shares every single day. And
okay, you've said that 4 damn times! When are you going to talk about the financing receivables?
Clear indications of this happening, by the way, in their financial data. We can see other sales and revenue, as well as wholesale sales and revenue, for hundreds of millions of dollars from,
Are you going to talk about the profit margin?
quote, related third parties, which
Okay, fine.
would be something like DriveTime, presumably, because the father of the CEO, as they jointly control the company, owns that too. Are we starting to see the conflict of interest here? To be clear, this isn't exactly an industry secret. There's plenty of people getting wise to what's happening right now, including a 308 pump and dump scheme for the benefit of its owners. The first iteration of that lawsuit was dismissed because it was an impermissible puzzle, as it's called, which basically means it didn't quite link all the parties together well enough. But that really just means rewrite it better and come back to me from the judge, which they did. And now that lawsuit, I believe, is making its way through the system actively. On page 2, we can...
The thing about lawsuits is lawsuits drag on for years, and like you can kind of keep the cycle going, right? It's actually interesting. The scheme required Carvana to enter into a sham pass-through sales arrangement with DriveTime to increase its reported sales, flout state motor and title registration laws and regulations, abandon its purchase and verification standards, obscure critical metrics related to retail gross profit per unit, implement an unsustainable nationwide expansion, conceal critical information related to its average days to sale measure, misrepresent per vehicle profitability. Yeah, defendants Garcia Jr., CEO Garcia Jr., and Garcia Sr., and Mark Jenkins, all of them dump shares, by the way, implemented a scheme to artificially pump Carvana stock price. Oh, I totally agree with that. Now, we don't know, right? Like, I want to be clear. The things I'm talking about in my video, they're just picking up on if this is exactly what's happening, which is our opinion that it's happening, it's fine until the stock price goes down. That's what matters.
See, quote, this scheme required cars...
Yeah, I just read it.
...to violating state laws.
Okay, who cares?
I have no short positions, no... That's
okay,
it.
disclaimers.
If you want to sell your car, definitely...
Okay, listen. Okay. I think he scratched the surface here. Could have been a little bit more clear about what the implications are to the stock. Decent video, cool little graphics. I don't have that kind of stuff. Good for him. But I think what you really ought to pay attention to are those margins on those related party transactions. And so if we look at, just disclosures in their books of related party transactions, we could also see that a lot of the debts that Carvana has are to related parties. So the $400 million in leases, some of these are from related parties. Under these other liabilities, the larger portion over here, you've got $98 and $48 million due to related parties. So basically almost all of it right here due to related parties. Current liabilities, you've also got, I guess maybe not all of it because these are the 2 different years, right? So 95 million out of 142 as an example. That's how to read this. You've got 66% of their other liabilities are just debts to themselves, right? So there's just a lot of this that it makes sense how they're playing this game, and it's fine until it's not. Accounts payable, $23 million payable to related parties. Related party transactions, 2014. The company and DriveTime Automotive, together with its affiliates, DriveTime, a related party company due to Garcia and Garcia controlling one or both, entered into a lease for some locations, whatever. Accounts payable related transactions, tax receivable related transactions, tax payments on behalf of non-controlling members. The company made mandatory withholding tax payments on behalf of the Garcias. I mean, this is like a slush fund for the Garcias. Company recorded TRA $170 and $82 million respectively, of which 132 will be paid to related parties. Again, so the vast majority going to related parties, operating leases. I mean, the whole thing is basically, you're not investing in Carvana, you're investing in the Garcia scheme. And it's fine for now, until it's not. until the Garcias can't afford to overpay for those loans. Now, maybe they're not. But again, that's the scary part. And I think there's no surprise that when you look at the quarterly reports, they're not actually breaking down their costs of sales right here, right? They're not breaking down their costs of sales. But look at this. If you look at, so what do we have here? Retail sales. So we've got total net sales and operatings of $5.6 billion in the quarter. Our gross profit is 1.148 if I divide those into each other. I've got a gross margin of about 20%, which seems great. But again, if you go to the annual report and you take out those related party transactions, where we had the annual report, I think I already closed it. We go to the annual report and you see there's no margin, no expense margin on it. You start raising your eyebrows a little bit and going, wait a second. Let's go look at it again, just because I think it's so interesting. Let's go to the annual report. And so you can pull it up right here. I'll show you exactly where it is. So annual report, PDF, and you know what? Let's turn the highlighter on for it, for the giggles. And, did I break it on the highlighter extension? I think I did. That's all right. We'll go ahead and pull it up again without the highlighter tool. That's sad. I wanted to use the highlighter. It's all right. Here we go. So jump on into earnings. Okay. There we go. Here we go. Yeah. Other gross profit. Let's see their note on it. So, other sales and revenues from related parties. So, they're saying 200 from related parties here. So, that's interesting because let's see what notes they have on other sales and revs. Because there should be a breakdown here. Other sales and revenues consist of 100% gross margin products for which gross profit equals revenue, which is a red flag in itself. And they're blatantly disclosing it here. So that's the thing. This is where you can't really call it fraud because they're so blatant about it. It's just circular. Let's see if we can find anything else and then we'll be done with it. Other liquidity resources. I want to see who they're selling these to. Other investing, financing, tax receivable arrangements. That's fine. They don't give much more of a definition of this. They just say 100% gross margin products. Other sales, primarily due to an increasing gain on loan sales, due to increased units sold, more loan sales, and higher loan spreads. Right. Other sales and revenue. Wild. Yeah, so let me see here. Cost of other gross profit and any other disclaimer here. No. 200. Okay. At least right here, they're showcasing that maybe only 200, or they're only disclosing that 200 million of these other sales and revenues are from related parties. So it's unclear what the other entities are that are involved in this. Are there potentially undisclosed relations or these other Wall Street private credit firms coming in to buy out these loans at a premium, sort of propped up by Garcia? Is, the Garcia family potentially buying, the worst of the loans and letting other Wall Street companies take the others at 100% profit to Carvana to kind of keep the cycle going? It's unclear. The reason it's unclear is because we don't get a lot of color. They just tell us that other sales and revenue are a 100% gross profit business and that it's going up because they're doing more business. That's it. That's all they tell us. Other sales and revenues consist of 100% gross margin products for which gross profit equals revenue. So they're bluntly telling us that private credit is coming in and providing us massive amounts of money. A chunk of it, we don't know which chunk, probably the bad chunk, is going to the Garcias so they can absorb or hide those losses, that's an opinion, to keep the cycle going. But again, if it weren't for those loan sales, that's where you look at their net income and you say, okay, well, if it weren't for the loan sales, we'd be losing money, which we talked about earlier. So who knows? Maybe the whole thing will keep going. Maybe all those loans are so high quality and it's a really sustainable business model. But I can't help but feel that the private credit stresses we're seeing could start putting pressure on Carvana. And the biggest concern is that once you get pressure on Carvana stock, you limit Garcia's ability to liquidate shares at strong prices to keep people buying the stock in the face of the insiders dumping. Once the trend breaks down, I would argue once we break 296 and these private credit fears exacerbate, we will probably relatively rapidly fall 50%, if not more, on Carvana stock. Now, I don't have a position for or against this company. It doesn't matter to me. I'm not short it. I just look at this as this could be the biggest victim of the private credit crisis because of how the business is structured. And I would just be very cautious. Cool. So what else do we have here? We've got the Qs. Qs now up 120. Nice. 120 basis points. You got a nice little recovery right here. Netflix. Yeah, Amazon's still down from its open. And if you look at Netflix, bro, still 4%. This is really good. Very, very good. Okay, good. So let's see. Somebody says Kevin Dario has done work on Carvana. Oh, okay, let's go see. Let's see what they say. Carvana. Carvana. Just Dario, okay. Now here's somebody else who has a piece on Carvana that y'all just talked about. Carvana filed its 10K 2 weeks ago. I already highlighted numerous red flags. Today I'm going to present you that ultimate proof that the company is cheating on its accounting. Oh, okay, let's see the ultimate proof. Carvana reported 155,000 cars sold, fine. The numbers continue to grow while the used car market is essentially going in the opposite direction. But that's okay because their app-based product could be, gaining a lot of market share. I think that the app is probably a good product. People seem very happy with it. So consider the competition, growing supply in Carvana's market. It's fair to expect an impact on the margins. Not necessarily. No, I don't think that's a smoking gun. I disagree with that. And then at this point, you might ask yourself, what's their secret? Total gain related to financing receivables sold to financing partners was $331 million during the 3 months ended in 2025. $878 million during the 9 months ended September 25. Right. Carvana is telling us that 70% of its $1.2 billion in sales are gains from selling these loans. Oh, it's more than that. It's more than that. They're doing these at like 100% profit, but that's okay. Okay. So overall, they sold $3.1 billion of loans in 25, $880 million profits. Let's just go with it. Who bought these highly radioactive subprime earning interests of these loans? The only way Carvana could make up so much money. Without this blatant fraud, Carvana would never be able to report fraud. I don't think this is fraud. I actually think this person is dancing on like a potential line here of like slandering the company, because I think they're fully disclosing the circular financing they're doing, which technically isn't fraud. Is it wrong because you're making, like, can you make the argument of fraud? Sure, you're kind of like implying the business is really profitable and successful when it probably isn't. But because of all the disclosure, they're probably so legaled up that they could escape the fraud allegations. That's my take on that. So I think Dario's going a little far here saying it's blatant fraud given the amount of disclosure that they put on this. Like somebody who reads it knows, okay, yeah, this looks pretty circular. I'm going to stay far away. All right. Interesting. I find that whole thing pretty interesting. All right, cool. So what else do we have here? Let's see what the doomers have right now. Reddit reports. Let's listen in.
60% plus year over year. And we really like our roadmap there. There are thousands more advertisers that can be on our platform, in addition to more verticals and more geographies to come onto our ad platform. So we see a lot of opportunity there across the funnel, in automation, in ad formats, and even in delivering more performance for our advertisers. So that's our core business, and that's where we're focused.
What about the AI chatbots and them actually helping you in terms of driving traffic? When does that really start to bring to bear?
You know, that's a space that is just under incredible heavy construction because it's also new and it's changing. The UI is changing, the products are changing, you know, how we think about the use of AI even on our platform, on Reddit is changing. So, you know, it's hard to say, I think, you know, I would say the relationships that we have with the LLMs and our partnerships, the relationships are really healthy, and we continue to learn a lot through these partnerships. I think, you know, we've certainly learned that our data is highly appreciated. It's highly used and cited. I think we're the topmost source domain in Q3.
Yeah, but it's plummeting. The amount of like people sourcing Reddit, especially for AI from AI searches, is plummeting. So there's definitely a red flag there.
Shares of Getty Images. At one point, the stock was up 60%. It's now still up 14%. Why?
Ooh.
Multi-year licensing deal with Perplexity, covering the display of images from Getty Images across Perplexity's AI-powered search and discovery tools. Now, coming up, more on AI. NVIDIA CEO Jensen Huang still hopes to sell its Blackwell chips to China. More on that next. This is Bloomberg Tech.
Cool. All right, so yeah, I think Reddit's actually doing quite well today. Let's see here. Reddit stock. Yeah, dude, it's up 18%. It's running really nicely right now. So let's go see. Let me see if I can find some of the goodies here. Okay. So what I'm gonna do is take a look at the earnings for this puppy and give you a little sample here. All right, so Reddit is company news. All right, so Reddit average revenue per user, $5.04. That's actually pretty good. You got to give them for that, and that beat estimates too. So pretty decent right there. Then let's see here. We've got EBITDA adjusted comes in at 236 million versus 196. I mean, they make money, dude. Like, you got to give them credit. They make money. Reddit sees Q4 revenue like 5% higher than expectations. Wow. And active users beat. Wow. Active users 116 mil versus 114 mil. Well, if you opened Reddit in the last 3 months here, thank you. Good job, Reddit. Now they've come down a bit. Let's go take a peek. Reddit. From their highs. Look at our retracement lines on this one. Really interesting, actually. We basically bounced off of 189, and we're now rejecting 230. I don't know that their earnings will be strong enough to really push them through 230 here, but that's pretty impressive. This is a really good retracement setup. If you want to set this up yourself, I set this up on 37.35 and 230.41. And then you'll be able to set this up as well. So very cool. All right, what's this China talk?
Today that China just wasn't on the table when it came to a discussion between Trump and Xi.
Yeah, I mean, there's been so many twists and turns in this one just in the space of this week. Jensen's been obviously making his case in Washington. Now he's making his case in person in Asia, where the president is. President Trump mentioned this Blackwell chip, raised the possibility, raised everybody's hopes, and then kind of took it away a little bit. So we don't really know where we are now, other than hoping that, because it's being discussed, that there is more possibility of NVIDIA doing more business in China.
Certainly more business in South Korea. I just want to bring what our own Sherry Ann was able to say and catch up with the CEO, Jensen Huang, while in a news scrum in South Korea. Just take a listen, Ian.
What's the potential of sovereign programs that you mentioned, especially across Asia?
Well, here in Korea, Korea has a chance to be one of the world's major AI hubs. And today's announcement, along with President Lee's passion and enthusiasm and drive, and all of my CEO friends here who are dedicated to create this journey for Korea, this is a perfect example of sovereign AI.
CEO friends being Samsung, Hyundai, SK Group. There was a lot going on, but some sovereign AI too for them in Korea.
Yeah, no, he's trying to make Korea into yet another example of this push that he sees of let's deploy AI everywhere, let's get it in government organizations, let's get it in corporate situations. And, you know, Korea obviously has a vibrant tech economy, companies like Samsung. So he's seeing this as another perhaps exemplary kind of position and country for this push that he's making around the world.
260,000 accelerator chips to go to Korea. Bloomberg's Ian King, we thank you. And look, there was more than just chips over in South Korea. Shares of fried chicken stocks have got the Nvidia effect. Restaurant Kochon F&B briefly surged as much as 20% on Friday, while Korean poultry processor Cherry Bro also soared by the daily limit of 30% trading volume, about 200 times on average. And also makers of chicken frying robots jumped. Why? Because Jensen Huang ate fried chicken in South Korea alongside the Samsung CEO and others. Wow, he manages to...
Dude, Jens, anything that guy touches, man. Well, good for him. All right, so let's see what we have here. Let's go see what... So we talked about the BlackRock news. We talked about Carvana. Cloudflare shares rise after beating on sales outlook. Oh, we were just talking about Cloudflare, too. Okay, good for them. I love the product. Just the valuation is cooked up. All right. Lessons from Trump's China trade war. Womp womp. The GOP's Obamacare opportunity. Wow, have they been watching me, Kevin, videos? This is where I say the Republicans could easily make it seem like, they're saving the day by bailing out the healthcare issue. So I'm really interested to see what the Wall Street Journal editorial board has about that. A quick note: today's Halloween, so I'm excited to get my Halloween costume on later. But we've been kicking butt, by the way, on fundraising at House Hack and Reinvest. It's been really good. So thank you to all of those of you. I just wanted to shout out a quick thank you. All right, let's go see on the Journal here. Okay, GOP's Obamacare opportunity. Rising premiums are the result of Affordable Care Act flaws. Republicans can fix it if they make the case. Yes. Federal government shutdown is stretching into its fourth week, and the press is missing an important story of the impasse. Despite the long-time Democratic political dominance on healthcare, more voters may be noticing for the first time in years that the ACA is a debacle that has made care worse and more expensive. And you could fix the downsides of it if you get to it. Democrats keep voting against opening the government, right, because they want the healthcare. Since the GOP failed to repeal the ACA in 2017, Democrats and the press have shut down the GOP debate about healthcare by warning that those with pre-existing conditions would be uninsured. Yet Democratic doom loop isn't having its usual effect this time. Let's see here. Early retirees, tacit. Okay, what is this? Take recent social media posts from Democratic Senator Amy Klobuchar of Minnesota. If Republicans don't extend turbocharged subsidies, early retirees will see their health insurance premiums skyrocket nearly 300%. Early retirees, this is a tacit admission that Obamacare encourages Americans to stop working. The Biden subsidies turbocharge that incentive by making subsidies larger and available to those even with incomes above 400% of the poverty line. This couple had an income north of $130,000 in 2024, mostly from pensions, according to the media article. Do taxpayers, many of whom pay for their own coverage at work, want to underwrite baby boom early retirement? Maybe the politics aren't as obvious as Democrats assume. Right. Well, that's the problem. Really what you get is when you get the government involved in healthcare is really you get the government subsidizing everybody. And that leads to obviously higher taxation. That makes sense. And people want, especially baby boomers, to have these subsidies because they're voters. Young people are really bad at voting. Part of it is because we're oftentimes a lot more time constrained. Like I don't actually think younger people are lazy. I think it's because, younger people have a whole lot of crap going on in life. A lot. And it makes it hard to have time for all this stuff, to not only be educated on voting, but then go vote, right? Not trying to make it an excuse, but like when you're working, you're starting a family, starting a household or whatever, it's a lot. All right. So let's see what else we got in this story here. Okay. Where did I put the darn thing? Lol. Here we go. More fundamentally, Democratic howling about premiums is an indictment of the system their party built. Paragon Institute offers a helpful chart showing that expiring pandemic subsidies are responsible for 3% of 2026 premiums. The real drivers are structural flaws that have plagued Obamacare. Republicans are right to refuse to extend these subsidies, none of which they voted for. May they stick to it, especially the wild card who lives in the White House. But the GOP has an opening to start building lifeboats for Obamacare. Yeah, you could fix the problems and you could hop to it. So I think that's their argument here. Table stakes for any Obamacare negotiations should include codifying association health plans that let small businesses join up to form larger risk pools to improve the economics of offering insurance. Yeah. All right. All right, Doomers, what do you got?
And, from a strategic perspective, I think everybody on both sides of the fence really felt like it made sense, and it really just came down to price. And for us, we put out a bid. We're, as you said, we're quite acquisitive. We bought Marimo yesterday. We bought Weights and Biases, Monolith, OpenPipe. We've really been buying and building the AI cloud. And there is a price point that made sense for us to move forward with that transaction. And we have a plan, and we are going to be very disciplined around that plan. And, at approximately 10%, it made sense. And if it's going to be above that, then we'll continue to use them as a vendor.
Well, Core Scientific now tries to diversify its own customer base other than just you. Does that give you any worry?
No, not at all. Look, our footprint within the Core Scientific ecosystem is about, I think it's about 580 megawatts worth of infrastructure. This quarter, we've signed over 600 megawatts of data center infrastructure outside and exclusively outside of Core Scientific. So, look, they're going to run their business. We hope that they are a strong operator. It's important to us that they are. We are hopeful that they will continue to invest in their business and their ability to execute and deliver infrastructure. And, we continue to work with them on a go-forward basis, just as we have for the past 5 years.
Look, they were a Bitcoin miner turned AI supplier. You two were that. Look, there are some others out there as well, TeraWulf and the like. Would you look to acquire any of those?
So I've always talked about acquisitions as strategic and opportunistic. My view is acquisitions like Marimo or Weights and Biases, Monolith, those are strategic acquisitions. They move the company and broaden our software solutions. The acquisition of a infrastructure provider is a opportunistic acquisition. We're currently building data centers within CoreWeave from the ground up to solve this problem of adding additional control over the infrastructure. So, you know,
All
we've
right.
got
It's pretty boring. All right. So what else? So let's see here. Okay. So, Okay. So next is going to be, might be going through, I want to go through Google at some point as well and Amazon, but I want to see first what we've got with the Financial Times. I want to see if they've got anything entertaining for us. And I've also got some videos that I want to react to. So let's see here. Watch later. Let's see what we got. All right. So this was interesting because this is getting a lot of attention. And it's this talk about Vegas casino CEO admits why the strip is empty. I thought that was very interesting. Let's take a look at see what this is. I haven't watched it. All right, here we go. Shocking. Vegas casino CEO admits why the strip is empty. Let's find out what's really going on here.
Las Vegas dead. Here's a few that I found looking online. Nobody comes here.
There is no
It's too
shortage of people commenting on Vegas being dead. I always feel like people are like posting Vegas at like 2 a.m. or sorry, at like 10 a.m. on a Tuesday or something. And of course it looks empty. Like that's how Vegas works though. When you go out to Vegas, it's packed at night. And then during the day, it's dead. But let's see. It sounds like they've got potentially a conversation here with the CEO or something. Let's listen in to see what they did.
Needs the people who made it lucky.
And it's great that we have a team of experts tracking the tourism numbers here locally, courtesy our economics department over at UNLV. And one professor in particular doesn't like what he's seen.
Because we have a lot of questions for him right now. For months, we've been really shining a light on tourism here in Las Vegas with how few people, I say few because it's still in the millions, but it is down. We're wondering, is it slowing? Is it?
During a not so recent earnings call, Caesars Entertainment's CEO, Tom Reed, made one simple statement that wasn't so simple after all.
Seen numbers, what, $1.5 billion plus. I know last year was a little shy of that. I'd expect it to be another record.
He said they were kicking out the lowest end. At first.
Wait, what did that have to do with the clip he just showed? The clip said record numbers. But then that's also not an earnings call, what he just showed. Okay. At first, people thought he might have misspoken. Right. Yeah, I'm confused.
People thought he might have misspoken. But the truth is, he didn't. They had no idea this would soon become the new business model. The following year, MGM's Bill Hornbuckle said the same thing, in calmer words. They weren't chasing budget travelers anymore. They were targeting quality customers. To them, that meant wealthier ones.
If you don't have gamblers, right? You don't need as many dealers, let's say. You don't need as many tables open.
Las Vegas is known for its bright lights, big bets, and nonstop action, but right now things are quieter than usual. A recent dip in tourism is sending shockwaves through the Strip, and casino workers are feeling the hit firsthand.
Fontainebleau announced some layoffs.
But Vegas didn't become an empire by catering to the elite. It was built on cheap buffets. $5.00
Hey,
blackjack.
you gotta go to Binion's. You know, you want cheap and a good experience. You go to Binion's in downtown Vegas. Anyway, let's go look at a recent earnings call because I mean, so far I'm getting a stitched together argument here. I don't know. I mean, I did my flight training in Vegas. Shout out to Henderson and All In. Like, I loved my time there. I loved doing flight training there. I got my instrument rating and my pilot license out there. So, big fan. But let's go look. I mean, let's see. Let's start with traffic. This is the Caesars earnings call. Okay, no search for traffic. How about consumer? If I could get anything on the consumer. All right, big question is leisure demand. Are we going to see it improve That's the difficult answer. That's the macro question. I know that mix will be better for us. Recall we have State Farm conference, so business travelers, right? But we're now, 4 months into this step down in leisure demand for Vegas. Oh, it is showing up in the earnings calls. And while we're better than we were in July, we're still not back to where we were on a year-over-year basis. So the question in 2026 will be, how quick does this recover? Oh, wow. Okay. So there might actually be some issues here. So let's see what date this was, this earnings call. But that is interesting, and it aligns with what we think with the K-shaped recovery of the consumer. This is an earnings call, mind you. The video we're watching was posted, before this. But this earnings call is fresh. This earnings call is literally from 3 days ago. So we are seeing that demand decline. Look at this. Anthony said a record in 2025 would be largely based on strength in the fourth quarter, hopefully for 26. Okay, so a little confusing here. There's definitely been softness in leisure demand in Vegas in the summer months, particularly in properties that I would view as price takers. Okay, price takers, that's a fancy way of saying they have pricing power.
Big PP.
And they're premium or luxury properties, right? And so that's where you're seeing price come down. Let's see here. And then a demand, and then as you go down, the consumer spectrum will move out. And then I'm sorry. They're saying that a price taker. That's interesting. Actually, it looks like they're defining this as the opposite. A price taker. That's interesting. Okay, I mean, I think they're arguing that they have to compete on price. I may have explained that backwards. So because based on their context here, they say here that premium actually held up better, but demand was soft as you moved out from the center of the strip. That makes more sense. This aligns with the K-shaped economy thesis. So once we look at the full context, it looks like you are getting compression in the lower end consumer, not the higher end consumer, which explains why they're talking about the State Farm conference. The State Farm conference is going to be your business cohort, which often is considered a more premium category. All right, fine. For regional, let's see what else we have here. But we're seeing flows improving, continue to see for demand for, okay, what is this? Let's see. Let's see what else we have here. Specifically around leisure demand, I heard positive leisure recovery, but I also heard that the group fill-in is mostly of sequential improvement, so quarter over quarter. Okay. We talked about last quarter, and based on the bookings we can see, it looked particularly soft, which is why we told you we were expecting a soft summer. As we sit and we think about this quarter over quarter, there's not a lot of group business in Vegas when the weather is particularly hot. Yeah, right. So in other words, you want the business customers because they're going to spend more, but it's hot in the summer, so the business people don't come, so you're overly reliant on the leisure travelers. However, those people aren't showing up as much as they used to. July was the worst, August built on that, and then in September and October, it continued the softness. Leisure customer has been softer on a year-over-year basis. Our occupancy looks better and our rates look better than it did in the third quarter. So things are looking better now is what they're saying in the fourth quarter so far. But the third quarter was basically hell for them in terms of occupancy. So a lot of empty rooms. And you had told the market that you were promoting more last quarter and perhaps rolling out more promotions. Okay, that's a great question. We're trying to become more efficient in marketing. You're dialing back what's not working and expanding what does. Oh, look at this. And I want to be clear. There was a sense that we were getting into a promo war. Wow. So it's getting so promotional, you're getting into a promotion war against the other hotel operators just to try to fill your hotels. That's not great. So if you think about the way marketing works, you may lean on the advantages a little bit and say, I'm not going to be as generous in my give back as others, and you're still going to perform quite well. Okay, this is just sort of them marketing it. So I would think that what we're doing is kind of taking up that slack, not entering a promotional war, and we're not seeing a significant response to competitors. That suggests that this is going to keep going higher. And we expect looking forward as flow through looks better. So I sense like optimism, but you have to try to read between the lines a little bit here, and it just doesn't sound good. It sounds like they're like, yeah, we're hoping this will work, but we're not sure. We don't really want to be in a price war because then our investors are going to dump the stock. I don't discount that there are areas in our business and in Vegas that may have gotten over their skis price-wise. So in other words, they raised prices too much post-pandemic. So this could be a post-pandemic tanking where people are just finally saying F you for raising prices this much. There's a degradation of demand. Occupancy percentage was over 90% in the quarter. Yeah, but you want to be at, 100%, right? Like you look at cruise bookings, you overbook cruises at over 100% because some people aren't going to show up. Wow. Most of the days you could have gotten a room in Vegas for $29 plus a resort fee on the Strip. So there's a value trade in Vegas. Or people just aren't showing up because it's all the other bull crap that goes in that's too expensive. Everybody knows it's not the hotel room that makes the money. It's all the other crap you got to spend money on. The entertainment, the drinks, the food, whatever. Wow. So there's almost a little bit of a sense of panic here. In this demand falling. I wonder what's going on with the actual numbers here. The only market I could think of that saw a significant shift in demand was Atlantic City. The rest of the countries performed kind of as you would expect. Okay, so this is more of a reference to Atlantic City. That's fine. So here's the CEO again. The biggest question is the consumer. Are we going to see that recover? Yeah, they don't know. Are we going to see it continue to improve or recover, or do we stall? That's difficult to answer. So in other words, here we are, halfway through the fourth quarter or a third of the way through the fourth quarter, and they still don't know if they're going to get a recovery in Vegas. That's actually not good. This is pretty bad. Oh, take a look at this. They talk about ages here too. Probably some margin coming in for legalized state. Anyway, like 18 to 21-year-olds and consumer demographics. Let's see here. Legalized sport. Oh, this has to do with the legalized sports betting. So they're trying to get more people involved in legalized sports betting. But honestly, with like Polymarket and Kalshi and stuff, you don't even have to go to these casinos anymore to go bet. You can just do it from the comfort of your phone in your own home, right? But if we go to Caesars Entertainment and we go to the investor relations page, we're going to get a little bit of a color on their latest filing, which was just filed, 2 or 3 days ago here. So this is great. We're going to get some really nice color into their 10Q here. So we're going to download their PDF and let's just see what the numbers are. So this is Caesars Entertainment, and this is their quarterly report ending September 30th, which again, the color we got on the earnings call, if they saw an improvement so far in Q4, they'd be cheering. But they're not. They're like, I don't know, man. It kind of feels like things are stalling. Maybe things will get better. But let's take a look at their revenues. So look at this. I've actually got casino revenues up, but total revenues are actually down. Not much. But in this economy where everything is going up, on a 3-month basis, you actually saw negative growth in their year-over-year revenues on this third quarter. So this third quarter sucked. Hotel went negative. Other revenue went negative. Food and beverages went negative. The only thing that was up was casino. So casino was up. Their operating income collapsed. Holy smokes. Look at this. $513 million divided by 644. That's a 20% collapse in operating income for Caesars. Wow, maybe it's true. Dude, look at the interest. Holy smokes, man. They spend all of their operating income on interest. $576 million on interest, and they only took $513 million into operating income. Caesars is full of debt. Long-term debt, $11.6 billion. Long-term financing, $13 billion. That's $24 billion of long-term debt. Look at the bills they have to pay. The current bills they have to pay over the next 12 months. They have $2.2 billion in bills to pay. Bro, they have cash of $425, including their receivables and their restricteds. They have about $1.35 billion in cash and receivables, right? And $2.2 billion in bills to pay. They don't even have money to pay their bills because their interest expenses are so high. So they need to start selling stock or borrowing more. So let's go to their cash flow statement and see it happen. Let's find out. Cash flow statement. So they paid off some debt here. That's interesting. Yeah, because the interest is so high. They paid off $1.5 billion, but then they took out $1.2 billion in debt again. They actually spent some money repurchasing their stock. So in this last quarter, they did better. They borrowed less. They paid off some debt with some of the cash they have, but now they're running out of cash. So I don't know why you're spending $180 million to try to pump your stock here. I understand why they're paying down debt. This makes sense. And if I look further out, this is 9 months. I'm sorry, that's 9 months. Oh, wow. So we don't even know what they did cash flow wise in the last quarter. I bet you in the last quarter they had to borrow more. That's fascinating. They're not even telling us that. Probably because it sucks. Wow. Okay, so that's interesting. But, some of this could have been driven by the first and second quarter, where they had extra cash flow and they were able to pay off some of their debt. But I think their borrowings, I wouldn't be surprised if a lot of these borrowings were here, but it's going to get worse. They need to borrow more just to stay ahead, or they need to sell stock. So how's the actual stock performing? So let's go to Caesars. If I go to Caesars Entertainment, the stock's actually up right now, but it's bouncing off a low. Look at this. COVID low on the stock is $6. So we're still above the COVID low, but look how much this has tanked. Since in the last 3 years, this stock has eviscerated money. In the last 3 years, this stock is down 83%. 83% crash on Caesars Entertainment. Probably because these bastards raised prices too much during COVID, thinking they were hot stuff, and now people are revolting. People are like, F you, man, I ain't paying this bullshit anymore.
Free drinks and free parking. It was the only city in America where a truck driver, a teacher, and a tech executive could sit at the same table and feel like equals. That was the magic.
That I found looking online. Nobody comes here. It's too expensive. Resort and parking fees are too high.
The resort fees are bullcrap.
Personal favorite, Las Vegas is too expensive and it smells bad. So
Well, honestly, a lot of the hotels are like, let me put it this way. Bellagio used to be lit. Okay? Now it's kind of like musty and old, right? Like I went to, personal experience. So Bellagio, a little pissed about. They've kind of fallen apart in my opinion. And I had that opinion back in 2019 because I held a real estate conference at Bellagio. And I'm like, man, this kind of sucks. Ironically, the Rio's the remodeled rooms are quite nice. I went to the Wynn with Lauren a little bit earlier this year, and the service sucked. We're like, we're going to have, a mommy and daddy trip. It's going to be great. It was just a day trip. The service was bad. And we're like, well, this is the Wynn. I think it's just honestly because they're trying to cut costs while at the same time they're not getting as many revenues.
Out to some local experts to ask them, is Las Vegas really dying?
To make it worse, they didn't just kick out the lowest end, they kicked out their foundation.
Yeah, well, keep in mind, too, in 2008, Vegas was like the first to go, right? So, like, this could be part of the big economic cycle.
And as the Strip now empties out on weekdays and dealers wait for players who never show, the cost of that decision.
Oh, great. I also just got a headline here. Asked if the U.S. and Canada will restart negotiations. Trump says no. Great. That lowers the taco scale.
Is finally catching up. If you ever walk the Strip when it still felt alive, hit
phantom taxes.
These, which I believe is simply an unintended consequence. We are forcing these individuals to move offshore.
Stevens calls those levies phantom taxes, since gamblers could end up paying taxes on money they never saw.
I don't think the executives blaming taxes are the problem. I think what it is, you're charging too much money, man. You guys got greedy.
Averaging over $55 a night. Even so-called budget
resort
hotels
fees?
like Excalibur and Luxor charge $45 in fees plus another $20 to $25 just to park.
We went to the Dorado Hotel. That one's beautiful because it's new construction, basically. I think it's like 22 or something.
Literally paying to lose money.
Republicans for the change, but says both parties need to cooperate to fix it.
I don't think anyone, Democrat or Republican, had any intent on hurting Las Vegas or for that matter, hurting the gaming industry in any sense.
This is a reference to the big beautiful bill and the gamblers' taxes. That's fine. Okay, so yeah, this is a $30 cocktail. Okay, so this is the other pisser. If you go to like a UFC fight in Vegas, they'll charge you literally, like Lauren's like, Kevin, get me a cocktail. I'm like, all right, $40. $40 freaking dollars. That's insane.
During the Great Recession, when somebody wrote that Las Vegas was the nation's greatest ghost town in waiting, right? And then during the pandemic, we all did it. We all took that walk down the Strip when nobody was there. It was unbelievably scary in terms of how are we going to bounce back? And yet still, here we are today. It's not how many...
And now the city is starting to feel it. Visitor volume fell 11% this June, with 1.5 million fewer tourists in the first half of the year alone.
Right.
The Strip isn't empty because people forgot about it. It's empty because the house changed the rules and the players walked away.
Okay,
Vegas
so
thought no.
a reference to the big beautiful bill and the gambling issue, that's possible as well. But you are also seeing that leisure demand down, which is problematic. So they are actually getting hit. This is true. So, like, in fairness, I started this segment out by talking about how, are people just on TikTok, like, trying to look for some drama? This is actually real. This is happening.
Gaming industry for the Nevada Independent, he tells me tourists are getting off the Strip.
Well, guess where they're going? Red Rock Resorts, Boyd Gaming Properties.
Yep.
They all did well in the last quarter. It's a lot of locals because locals don't go to the Strip.
Remember how I just mentioned the Dorado Resort? I'm 98% sure the Dorado Resort Vegas is a Red Rock resort. I'm pretty sure. El Dorado. I can't find. No, where is it? Not El Dorado. Where is it? What's it called? I can't find this darn thing. Vegas. What's this place called that I went to? Dorado Resort. Let's see if I can find it. It's close to Henderson. I don't know. Maybe I got my name wrong on it. But let me go to. I'll just go to Henderson. Here, I'll go to Henderson Executive Airport because this is where I did my flight training. And then where is the casino? The one that I'm thinking of is off of County Clark Road by Costco. Durango, not Dorado. Duh, dumbass. Sorry, folks. I don't have the best. It's right across IKEA. Lauren and I were here and we're like, hey, we can walk to IKEA. And then we're like, bro, it's 100 degrees. We're not going to walk across the highway to go to IKEA. But so Durango, they're off strip. It's easier to get to from the Henderson Airport. They are, it's a small resort, but it's really, really nice. And I'm pretty sure Durango is a Red Rock resort. Let's see here. Hotel Durango. Here we go. Durango Hotel and Casino. Roads. There it is. Owner, Red Rock Resorts. Boom. And opened in 2023. That's what I thought. That's the same experience I had. Get off the strip where the service has gone to crap and go to some of these newer resorts. Same thing this guy's saying.
And not going to pay the prices down there. Say the out-of-town visitors from Southern California,
yeah, it's me.
They're discovering some of the local property.
That's me.
And it's not just brick and mortar competitors. Online gambling is...
Dude, honestly, having an IKEA next to Durango is like, it's kind of a plus.
Exploding too. In July...
We went and had lunch there, and the lunch was like $8.
2025 alone, digital casinos raked in $1.78 billion, 0 cents, up more than 20% from the year before. Players are swapping plane tickets for phone screens. They can gamble from home, get better odds,
correct.
And skip.
Right, exactly. That's the thing. With the betting markets now, you can do your betting at home. So these are a lot of issues for Vegas. I think they're right about that. Bellagio, Wynn, Ari have all
reported cooling demand from their elite guests. Because here's the thing. The rich don't need Vegas. They can play in...
We got the stock market, bro.
Monaco, Macau, or Singapore, where exclusivity feels authentic and privacy is part of the package. Vegas tried to reinvent itself as a luxury playground, but forgot it was already something far more powerful, the people's casino. The irony is brutal. In trying to escape the chaos that made it famous, Vegas cut out the very soul that kept it alive. The showgirls, the slot players, the bus tours, the retirees chasing luck. They were never the problem. They were the heartbeat. Now the Strip is learning what every casino should know. You can't outsmart math. When the middle class disappears, even the rich lose the crowd that made them feel rich.
That's an interesting line. Take that for what it is. But yeah, it makes sense. It makes sense. So I have to say, I'm surprised. I thought that a lot of the TikTok stuff was honestly just clickbait, that Vegas was dying. But I think Vegas is getting the big middle finger, which is y'all raised prices too much, you got too greedy, and now it's going to show up in the corporate earnings. Sucks to suck, basically. So that is my assumption here of what's going on. I'm going to look at one more. I'm going to look at Wynn. So we'll go look at the Wynn Resorts 10Q. I didn't have a great experience at the Wynn. That doesn't necessarily mean their earnings are down, but they are an on-strip property. So why don't we go take a look at it? We looked at Caesars, and so let's look at the Wynn. And then we've got, here we go. This is Wynn Resorts Limited. Let's see if they're winning. Wow. Almost no growth in operating revenues as well. 1.7 billion versus 1.737 divided by 1.732. Wow. That's 29 basis points of growth, which looks like 0.29% growth. Nothing. Basically negative with inflation. Wow. How's their profit? So their operating income is also down. 264 minus 269. 264 divided by 269. I've got about negative 1.9% operating income. Yeah. So even the Wynn, which is tailored to more of potentially a luxury style customer. Wow, look at their earnings per share. They're at, what is it, because of interest? Or what happened here? Oh, they have an other loss of $36 million here. What the hell is the other loss? Because their net income fell like 40% over here. Holy smokes. So what's other? How do you just write off $34 million and not tell me what it is? You have to tell me what it is. It's going to be in the footnotes here somewhere. Other. I'm very curious now to see what your other is. It's going to be like some restructuring, like severance for firing people or whatever. Other long-term debts. They also have a lot of debt. Sucks for them. Debt's so great when things are going up. But I'll tell you, you know me personally, I'm so grateful for this. I keep talking about it. I'm debt-free, no mortgages, no personal debt, nothing, right? My real estate startup, no bank debt. We got a fraction of the assets we have for convertible bonds to you folks who have invested and trusted us. Thank you for that, by the way. We couldn't do it without you. But thank you for the SEC. Make sure you read the offering circular if you're considering investing at reinvest.co or househack.com. It's the same company. Okay, so other. Why can I not? I want to find out what happened with the write-off. So I'm just going to Command F it because I can't find it. Other. Property charges. It's like $30 million write-off. It's a corporate and other. Okay, other. Other non-operating income and expenses. We incurred a foreign currency remeasurement loss of $36 million because of exchange rate fluctuations of the dollar. Basically, the dollar lost value. Okay, so the dollar went down. All right, well, I mean, it's not necessarily Vegas related, but here are the Vegas operations. You could actually see the breakdown. Wow, Macau actually got hit hard, though. It's not like Macau is down 10%. So it's not just Vegas. Wynn's just getting hit across the board here. But Vegas definitely got hit as well. 0.1% on just Vegas. Operating revenues, rooms down 10.5%. Food and beverage down 6.8%. Entertainment down 5.5%. That's the last 6 months. Wow. Casino revenue decreased primarily due to lower VIP win as a percentage of turnover and mass market table games at Macau, partially offset by an increase in casino revenues from Vegas due to higher gaming volumes during the 6 months ending June. Yeah, but they talked about also the pain really starting in July at Caesars. That's interesting. And these are just some miscellaneous win rates over here. That's fascinating. Table game wins. Oh, look at this. You could see the percentage of people actually winning at different locations. Table game wins, 18%. VIP win as a percentage of turnover, 2%. This is how the casinos make money. Your odds of winning as a mass market table, 23%. Sort of the net wins. This is how they make all the money. As you know, they're taking the 80% side. That's fascinating. That's very interesting. Wow. Occupancy rates. Here you can see occupancy rates in Vegas. Wow. The occupancy rates actually kind of suck. And they've fallen quite a bit. That's a big drop in occupancy, down to 88.3%. And that's before what we saw about July. Yeah, might be true. Vegas is getting whacked. Very interesting.
But not as rapidly that warrants a lot of cuts. So it feels like the Fed is going to take it meeting by meeting based on the data that they have.
Sure.
And assess conditions before they progress.
It's a true debate inside the Federal Reserve. Raphael Bostic saying that he still thinks we're in restrictive territory. Beth Hammack just saying, I would have preferred to hold rates steady this week. And of course, we know there are two dissents in the decision on Wednesday. So Badra, economists say that dissents are the new normal now at the FOMC. What does that mean for bond yields to have that level of dissent when we've gone through this period where everything was pretty much unanimous?
I think dissents are healthy in this environment because we have, a situation where the risks are not really very clear, and we do have some outliers on both sides. So I think a healthy debate dissent is actually quite a good thing because you want to have all the voices heard. I mean, our personal view is that the economy is in a good place. Maybe the Fed shouldn't really be cutting rates aggressively in this environment. Financial conditions are still relatively easy. On the other hand, there are good...
But the reason financial conditions are easy is because the stock market is high. Like, the stock market is weighed in financial conditions. So you have to remember that. Like, when the peg leg of the stock market goes away because you have a stock market correction, financial conditions will look really, really tight.
In addition to cutting rates and kind of keeping things open for December, is end QT, or at least announce the end of QT. Brian, what does that mean for how you allocate for where you want to be on the curve?
Wow, the Qs just hit 630. What happened? So, Besson says U.S. and China would sign a deal over the coming week, confident would stick to it. Besson says, under the one-year deal, China would allow American investors to take control of TikTok. China agreed to postpone the implementation of the rare earths. Everything's ironed out in terms of permissions. Should see a transaction very soon. Right, we've heard that for a while. Chinese leadership were slightly alarmed by the global backlash to their export controls. Yeah, all right. It sounds like, I wonder if the Canada thing is what's pissing people off a little bit. Bostic's also talking less than half the upward price pressures being reported from tariffs. Hammock sees little progress being made on inflation. Yeah, it's just all this tariff stuff ironically keeps the Fed aggressive, and that's not good. That's probably going to push our 10-year yield up. So let me see what the 10-year is doing right now. 10-year bond, yeah, it's still at 410. And then Bitcoin's still at 110. Okay.
Definitely, there are liquidity constraints in the system, and ending QT is the right strategy. I think what's going to be interesting is how the Treasury looks at its issuance going into the refunding meeting next week to adjust for this change in quantitative tightening from the Fed, because they might potentially think about issuing more bills, more front-end instruments, if there is another captive buyer for this particular sector of the yield curve.
All right, good stuff. Thank you both so much for joining us today. Brian Whalen of TCW Fixed Income and Surajo Rajappa of SocGen. Appreciate it. Coming up next on Real Yield, the auction block, Meta's massive bond sale driving high-grade sales to a record October. We're going to talk credit next.
Yeah.
Alphabet 91 to 93 billion, above their prior range.
Boring. Bostic says we're not completely flying blind.
By trying to incentivize pharma to bring manufacturing back over here, the president is sort of looking at this categorically and saying, Brian, to your point, let's decouple, but let's do it piece by piece and back away as much as we can, because we can't kind of set off a bomb right now.
There's been a move afoot. A lot of companies have moved to Taiwan, Vietnam, away from China, but need to see more and more and more.
Absolutely. All right, let's pivot here. Take a look at shares of Amazon. One of the big movers in the market today, surging to a high after reporting blowout earnings. The AI boom helped the company's cloud growth, seeing sales increase by 20% to $33 billion. But competition is tough. Google is reporting big growth of its own in the cloud unit as well, while Microsoft says Azure revenue is up almost 40% from last year. So this is a competitive space. So far, so good for all the big players. But they are fighting for a piece of this pie, Gary.
I have to tell you, I am so amazed that these companies, I remember when the first one hit $1 trillion, I said, no, it's not going further than that. We're at $5 trillion. These are just magnificent category killer companies that are doing things right and are not, sometimes you sit back and you rest on your laurels. They're paranoid. They're making sure that going forward they continue this route, and there's just quite the few, and I think there's going to be more going forward.
All right, let's leave it there. Coming up, when New York liberals think that you're too progressive, that is when you might have a problem. Why a very familiar face in the Democrat Party is dropping big bucks to stop Zohran Mamdani. We'll show you who next.
When you can't watch, listen. Get the latest news.
Definitely gonna get busted for that. I was like in the middle of going to the bathroom, like I gotta wash my hands. And I'm like, no, don't end it. I just wanted to listen to what they said. Oh well. Rip. Oh well. All right, so what's going on with the Fed? Because there's a lot of Fed speak right now. And I think we ought to look at it. Because I think some of this Fed speak is what's responsible for tanking the market a bit right now. Somebody says, is House Hack Round 5% changing or closing this week? I got more funds coming and wondering if there's any change in November with new month. So, no plan changes right now. The reason for that is, remember, I've always said, like, if the Fed poops the bed and we get some panic from the Fed, we'll close the fundraising or change it rapidly. But right now, we actually think it's a really fair deal what we're offering. You know, it's if you go to househack.com or reinvest.com, you get 5% as a yield paid monthly through conversion. You get 100% of the upside in the stock. The conversion value of the stock is based on the valuation of our company before we had any of this talk about artificial intelligence, because we had our AI product. We just never thought about licensing it. And so now we're building out the AI product to be an app that, you know, over time we'll be able to show you, hey, here's how this property could boost your net worth. Here's how you should prioritize the deals you're looking at. Here's a deal that might even be a negative wedge, right? Like you might lose money buying this deal. Here's like how to, value your kitchen remodel, or how much to spend on the kitchen remodel, or whatever, right? Like those are all new things. So we think we're basically just taking the company's revenues and paying out 5%, which is, in our opinion, a very inexpensive form of financing. Then we use that to go buy more real estate, which yields money from rent. We go develop more real estate, and then we also put money into R&D, right? So we think we're a pretty straightforward diversification play. The argument that I've made about closing the funding round is that if the Fed comes in and says, hey, we're cutting rates dramatically, then obviously we're not going to need to pay 5% anymore. Honestly, we probably don't even need to pay 5% right now. But I think it's fair because right now we only raise from subscribers, really. Like there's no venture capital or whatever. I think that's the game changer, is what happens in the future, is like what happens when we launch our AI product and hopefully it does well. And then, you know, venture capitalists start wanting a piece. I mean, the valuation is going to change, hopefully a lot, you know, because I want to IPO it for big dollars. You know, obviously that's the goal. Can't guarantee that. But yeah, that's sort of the game plan. So, I mean, really, you know, when do we end the 5% round? We end the 5% round when the Fed panics. Otherwise, you know, I guess the next meeting would be December. So wait until then. But we are going to talk about what the Fed's saying in just a moment here. So I want to, because there's a lot of talk coming out right now from Hammack, Schmidt, and Bostic. So we're going to have to cover this in detail and see what's going on here. Let's listen in here for a moment, though.
Much robust demand.
Oh, and make sure to read the offering circular at reinvest.co or househack.com.
Put together what this means in terms of long-term growth and short-term CapEx spends.
Just a few weeks ago, we saw Oracle borrowing $18 billion in the investment-grade market, and banks are now preparing to launch a $38 billion debt sale to fund data centers tied to Oracle. But you also look at the cost to protect against an Oracle default rise. If you look at the credit default swaps, for instance, it has gone up. William, how do you read this? Is this some skepticism over the AI trade? Is this just normal hedging?
Listen, as credit investors, what we're really trying to establish constantly is what is the ability for that company to service debt long term. And when you have this big inflection point of unknown projects that require an immense amount of capital, credit investors rightly are demanding a bit more premium for their investment. That's healthy, that's disciplined. Investors are not going to necessarily believe with complete certainty that all of this CapEx spend in AI is capital that's really well spent, that you're going to earn a really strong return on that capital investment. So there's some question marks around that. We think that's healthy. The bigger trend for us is how much of this CapEx spend is going to sit on the balance sheets of investment-grade issuers that have really robust cash flow to service that debt versus how much of this is going to be done in a more speculative manner. And that to us is concerning. If you look at previous cycles, where we've run into big issues is when investors start to believe all the hype, they do not demand that premium, and they don't do their credit work.
So
yeah,
the unanswerable question at the moment is at what point the credit cycle really turns. And here's what Winnie Caesar told us. Take a listen.
I do think that over the next 12 months, there is that risk that some of these lofty expectations start to be a little bit disappointed. And that's where you start to introduce some of the conversations around what is the true fundamental trajectory of corporate credit. We've enjoyed a massive ratings upgrade cycle. Is that going to start to reverse and start to spook investors a little bit?
Yeah.
Stephen, let me bring this question to you. What is your take on what Winnie just said?
Well, I think credit cycles historically, as well as going forward, are correlated and in sync with economic cycles. And so the first questions around, are we facing a potential credit cycle in the future relates to what is your economic outlook? I would separate that from what you talked about earlier, which is the large growth in debt, particularly related to AI spending and adjacencies, creating some type of a potential future problem if the return on investment is not there? I don't necessarily think that's a problem, that's something down the road that I think will be a theme to monitor, and it does represent some potential risks to credit markets overall. But in the near term, I think you've got economic conditions.
Q's now dropping under 630, not bullish.
Type of a material downturn in credit cycle, and that's been one of the pervasive.
Netflix still holding on to 3.2% though. We were bullish on that this morning. Let's go. We made good dollars there.
Since the great financial crisis is an environment where you've had a bunch of mini cycles, but we really have not had a full credit cycle. And I think there's a variety of different reasons for that. And even though there are some rising default rates that's taking place in credit markets, it's rising from ultra low levels to still moderate levels. So that's far from what we would characterize as a idiosyncratic or versus a systematic problem in credit markets going forward.
At the other end of the credit spectrum, when you look at high yield, the junkiest of junk bonds seem to have completely recovered from wobbles following the collapses of First Brands and Tricolor. If you look at this chart, the white line at the top is the CCC spread, and it is at the tightest since March, right around there at least. The bottom blue line is the high yield bond index overall. William, where in the credit market are investors pricing in any degree of risk? Where there are still signs of lingering concerns about borrowers' ability to repay debt, particularly if the economy starts to worsen?
We think there's actually a lot lost when looking at these high-level averages. There's actually a lot of discipline being shown under the hood. And we have moved into an environment, we think, that was really dominated by an euphoric type message from investors that were constantly searching and hunting for the most amount of yield, to one where investors are really looking for safe carry. And that to us is healthy. So underneath the hood there, when you look at CCC spreads, there's a growing percentage of the market that's trading at stress levels, and that's not really bouncing back. There are still significant concerns about the ability of those credits to survive, and especially to survive given what looks like a slowing economic environment. And then there's a large portion of credit markets that investors feel really safe in, and that's leading to spreads being quite tight. But
like
the other
Carvana.
big element of this is that spreads are not the only thing that we're supposed to look at this cycle. The reality is that spreads are tight, but yields are still fairly elevated, and investors still really like the idea of adding significant income into portfolios. So what you're seeing is more of a investor change of behavior, of motivation, and what they're searching for, and they're really relying on what they deem as safe carry. So you're seeing double B spreads, as a great example, move to very tight levels, and also in single B space, but there's still some significant concern and discipline shown in the marketplace.
All right. Well, we got to leave it there. That's all the time we have for this, but obviously a debate to be continued. Stephen O of PineBridge Investments and William Smith of AllianceBernstein, thank you both for partaking in this credit roundtable. And if you can't get enough talk on credit, check out the Bloomberg Credit Edge weekly podcast.
No, thank you.
About what they're going to give, and you need him because if your lot in life's going to stay the way it is. We've seen one video now where he's talking about, he was asked, what if all the rich people leave? Well, and what if the businesses leave? Oh, we'll get them on the way out, and if they do any business here, we'll tax them, some sort of exit tax. And then as a Jew, I'm just heartbroken, everything out of his mouth continues to be IDF, Israel, Jews, not in a positive fashion, which has me quite worried because we just came off of the allowing of...
Oh my gosh. As a Jew, man, come on.
How incredible it would be for any streamer, especially Netflix, to take things like the DC Universe and Harry Potter and a library that includes things like Casablanca, and not only put those things on the streaming service, but create brand extensions, new shows based on them, sequels, reboots, spin-offs, 100%. But the price, if you take the equity market cap and then you
All right,
add...
this is boring too. All right, so let's see. What else have we here? So, oh yeah, we were going to look at the Fed. Okay. Let's go see what's going on with the Fed. I know somebody in the chat's like, bro, pulling the Jew card. I know, right? Like, come on, man. Like, why don't you just quote what Mamdani says instead of like just going straight to, well, you know, as a Jew, I just don't feel like I like him. Like, okay, let's put aside what you identify as or how you see yourself religiously or whatever, or how you were born or whatever, and let's actually get into some facts. People are really bad at doing that. All right, so let's see what's going on with the Fed commentary here. Oh boy, oh my lord. All right, let's see here. This is a lot. Okay, so we're gonna have to write this down to consolidate all this mess. Okie dokie. Fed. All right, so today we're gonna have Fed commentary. So what do we have on the Fed commentary side? We're gonna go with Bostic. So Bostic says, every meeting is live, difficult to make forecasts. Fed commentary, Hammock. Let's see what she's got. Core services, inflation, too strong. Powell accurately reflected a range of views. Right, it's a pretty divided Fed. This is a difficult time to make forecasts. Businesses are hesitant to hire at entry level. To hire at entry level due to AI. Okay, Hammock says she's open-minded to labor softness concerns, but sees more inflation than just tariffs. Okay, and then we also had the Trump, not open to new discussions with Canada. That hurt a little bit. Hammock says we're right around neutral. That's not great. We're around neutral now. That's crazy. Would have preferred to hold. Would have preferred to hold. Now, she did vote for the cut. Vote for the cut, citing labor. Okay. Bostic also wasn't a fan of it. He eventually got behind the cut. So it sounds like he had to be like arm twisted almost to get behind it. Bostic still thinks we're restrictive. Hammock says we've seen some stress in the repo in the funding market. So that's liquidity stress. Some liquidity stress. Okay. Logan. Fed might need to buy more assets if repo rates stay elevated. Interesting. Fed commentary by Lori Logan. May need to buy more if Fed rates, if reserve rates spike. Stay elevated is what she said. Stay elevated. Okay. Logan, I would find it difficult to cut rates again in December. Difficult to cut again in Dece. Would have preferred holding rates steady. Preferred to hold this week, but did also eventually vote for a cut. So the people who voted for a cut didn't even want to. That's interesting. Fed may need to buy assets. More assets. That's said a couple times here. Interesting. Schmid comes in and says labor market is in balance. That could be the biggest canary in the coal mine for the biggest blind spot for the Fed. It would be the better analogy. Labor market is balanced. Labor market in balance. Inflation too high. Okay. Okay. And then Hammock's still talking. Ample reserves regime is appropriate. Seen some stress. Must have, okay. Let's see if Nick T is talking about this. Let's go drop that in. This is all going on the Meet Kevin app if you want to see this. Okay, cool. So let's go. Let's see if the journal is talking about this or Nick T. Let's go to Nick D. Nick T. Ah, yep. Nick T is talking about this. So I do not see a need to cut rates this week, and I find it difficult to cut rates unless there's clear evidence that inflation will fall faster. Right. Oh, this is her statement. Okay, so we'll pull that up. But I'm going to slap her statement into here too, because I think that's interesting. And there we go. Ample liquidity. Prefer to hold rates steady. The labor market is in balance and cooling slowly. Why is my highlighter not working? This app drives me nuts. Just logs me out like I feel like every 5 minutes. Quite annoying. It's all right. No problem. You know what we need? More coffee.
The APEC Leader Summit here in South Korea earlier today. He called on other nations. He called for unity. He warned them against upending a global supply chain, saying that countries need to work together. But it is probably worth pointing out that the now delayed but recently unveiled export curbs on critical and rare earth minerals from Beijing would have done just that, upend supply chains not just in the U.S. but globally as well. And keep in mind that those restrictions still technically remain in the pipeline. They're only delayed at this point for a year. Combine that with the export curbs that have already been on the books and the fact that China's export licensing system is considered to be opaque. It's led our analysts at Bloomberg Economics to say that even amid this trade truce, these discussions, it really hasn't changed China's grip when it comes to the global market for critical and rare earth minerals. So while this trade truce does appear to be on track, it kind of goes to that broader theme that we've been talking about all week, which is that those fundamental issues that led to this standoff between the two countries still remain unresolved. Spooky? Now, we did hear from President Trump in the last hour speaking to reporters on board Air Force One. He did make some headlines when it comes to China. He said that he would love to cut that fentanyl tariff even.
Tell me more about the headlines.
Have it from 20%. This is the first indication that we've gotten from the White House that now 10% tariff linked to fentanyl could go down to zero. We're going to have to see if that actually does materialize, because at this point we haven't really gotten those indications. Now, Scarlett, President Trump made those comments in the U.S. He's no longer in the region, as you mentioned, but a lot of leaders and executives still are here. And I wanted to point out that today, Chinese President Xi Jinping did have a few high-profile meetings on the sidelines of APEC, including with the new Japanese Prime Minister, as well as the now in place Canadian Prime Minister Mark Carney. As we know, that country is having its own issues with the U.S. when it comes to trade.
So the high-level discussions continue over in Asia. When it comes to U.S.-China discussions, what's next for the two sides? Of course, they're hammering out details of what was agreed upon this time around. But is there a next round of discussions scheduled? And do we get another high-profile meeting between the two presidents?
Man.
Right. So as of now, President Trump has confirmed that he is expected to head to China in April, and that's when we're expecting the next face-to-face summit between the leaders. Of course, we know that a lot went into just getting this summit off the grounds. Oftentimes, there has to be multiple lower level meetings in place so that there could be concessions made and a framework agreement essentially teed up. So we're going to be watching as those other key negotiators like Treasury Secretary Scott Bessent and the USTR Jamieson Greer work with their counterparts. They say, of course, that they are in close contact with them. We heard from the Chinese side the other day releasing a statement after the high-profile meeting calling for immediate contact between the two countries so that they can continue ironing out some of these provisions that maybe haven't yet been implemented, including China pledging to drop its own tariffs on U.S. soybeans. For example, that's playing a big part in that key concession so that they can continue to import U.S. soybeans. So there's a lot of the finer print that does still need to be worked out. Scarlett, after President Trump goes to China, he said that Xi Jinping would come to the U.S. next year shortly after, but still to be decided whether that's at Mar-a-Lago or the White House.
All right, good stuff. Tyler, fantastic reporting from Asia this week. Tyler Kendall is our...
We love hearing from Tyler Kendall. Although, honestly, I don't think we're really going in. I mean, this is just a 12-month taco is what this is. All right, look at this from Lori Logan in the meantime. Okay, labor market imbalance, unemployment rate at 4.3%, up only slightly. Not seeing a widening gap between number of jobs available and number of people who want work. Basically, jolts in balance close to 1-to-1, right? And then we have estimating break even at $30K a month. You know, probably lower than that. Powell seems to think it's closer to 0 on break-evens. And then unemployment claims and layoffs low. Watching news, though. She says that, right? This is very interesting. Big risk factor, right? Big risk factor would be a... in low hiring, market may not absorb layoffs. That would be bad. And if the market does not absorb the layoffs, then you could get a rapid cooling. So that would be basically the normalization of the beverage curve. Normalization of beverage curve. And then on top of that, you have high asset valuations can snap back without much warning, which might take the wind out of consumer spending, which she says, which is already slowing. All right, so we saw that. The slowing part she has right here, consumer spending growth has slowed. Okay. And then, if any of those things happen, this is the big thing, right? If these risks materialize, the FOMC will be able to closely monitor and address promptly if there's evidence of these materializing, right? So, I forgot the I. This is basically saying, let's fight inflation now, but if beverage curve normalizes, we can cut fast if we need to. That's the thing. It's slow bleed until shock. I mean, we've heard that for a long time before. Okay. Inflation persistently running. Several tenths above target is not an emergency. We have an equally serious obligation in employment. Inflation persistently. Okay. I carefully weigh the potential labor market cost, but labor demand and supply are in balance. and we could respond if there are more issues, not ones that currently warrant more preemptive action. So this is basically saying, look, this is what I said before the meeting, right? I mean, she's basically reiterating exactly what we said. Reiterates our exact plan. ADP Tuesday told us the Fed will argue labor is stable and no rush to cut more, no cliff. Okay, that's why we got a hawkish Powell. That's why we got hawkish Powell. And reduction in odds for a a DEES cut. Current odds for a DEES cut are only 61%. 61% chance of a DEES 10 cut. Wow. Somebody here writes, I just lost my job abruptly after 7 years and the company is funded by BlackRock. Nobody knows what happened. CEO is MIA. The company is called Renovo Home Solutions. CIA's MIA, or CEO's MIA. That's always the funny thing about me as like this, as a CEO is like, I'm just like here live all the time. Like you could always reach me, you know? So what is this? Renovo Home Partners? 2 days ago. Renovo Home Partners shutters operations. Oh. What is this? Renovo Home Partners. Breaking news about closure. Dallas. 3 days after ceasing operations, there's been no word from BlackRock about plans for 7 companies that were apparently shuttered on Tuesday. Calls and emails to BlackRock were not returned. Benefits will end today. A New Mexico employee out on disability was told his workers' comp benefits will end today. A former Reborn Cabinets employee shared contents of the Reborn email. Oh, they own 8 remodeling companies, somebody says in the chat. Wow, this is huge. Wow. Yeah, no, I said Powell is bullish the economy, right? That's what I said. Bullish the economy, but I said that would be bearish rates, that rates would go up. Now, we weren't expecting them to rug our September rate cut, in fairness. That was a little bit of a surprise. What is this? My pants are vibrating. Nick T says there's an inability of the Fed to reconcile what's going on because of the lack of data. That's actually a really good point. Nick T. Fed unable to reconcile differences due to lack of data. Right. Schmid says 25 BP won't do much, but it could affect inflation more. 25 BIP won't affect employment much, but could hurt inflation. Put that note down. Okay, so somebody says pants are vibrating because of Tyler Kendall. Whoa! Hey, yo! Oh! Okay, so I want to go back to this Renovo thing. So let's see what we can find out on Renovo. Return truckloads of supplies to his office. Qualified remodel. The closure of Renovo to this point has been murky. Little recourse. The company with knowledge said expect a Chapter 7 bankruptcy filing. Wow. Let's see what else is going. Let's find out here. Something weird's going on here. All right, let's see here. Renovo Home what is it? Remodeling or solution? Renovo Home, whatever, bankruptcy. I'll just say bankruptcy. All right, let's try to figure out what's going on here. Okay, so there's talk here about, what is this? Clients, Renovo email. Renovo, let me see if there's like, if I can get some background on that. Renovo Home Solutions. So, Renovo Home Solutions, what we do, our work, our services. What we do, flooring renovation, handyman, paint. Well, they do a lot of stuff. Is this them? I don't know if this is them, Renovo Home, or if this is a different company. Renovo Home Partners. Renovo Home Partners. Oh. Okay, interesting. Wait a sec, but they have a Trustpilot review here. Oh, wow. Oh, no, that's GoDaddy has that Trustpilot. Okay. Questions, frustrations about Massachusetts remodeling closure. Or is Minnesota? There's a lot of news, but it's all over the place. Renovo Home Partners, a remodeling giant with $650 million, is out of business. Qualified remodeler reports. Is that the website that I have here? Who's this? Qualified remodeler. Okay. There it is. Update. Yeah. Okay, this is the article we've been looking at. Okay, so that's what other people are citing this as well. All right, so Renovo Home Partners has apparently ceased operations. Now they are BlackRock TCP. Who's that? BlackRock TCP. Is this like a subsidiary? BlackRock TCP, NASDAQ TCPC, TCPC. What is this? This is a BlackRock fund. This has a market cap of 491 mil. And 17% dividend? What? Okay. So, apparently backed by BlackRock TCP, public as TCPC with 17% dividend. And I mean, the stock's down this year. What are we down? We were at like 8%. Or $8. So the stock's down, what, 578 divided by 8? 28%. The stock's been falling since its peak in December 2023. Stock down since D's 2023. What? $9 from peak. 930 divided by 5.78. Oops. 5.78 divided by 9.3. They're down 36%. 38% actually. Okay. So we can look at them for some public filings in a moment. But this is an externally managed specialty finance company. Oh, another one of these financing bastards. Interesting. Dude, how much are we going to see this? Most important part, BlackRock in February on earnings call pushed the company to non-accrued status. I don't really know what that means. I think they knew. I don't really understand that. But anyway, this $400 million AUM or slash market cap fund, I should just put market cap, is described as an externally managed specialty finance company focused on middle market lending. I can't help but think this is another cockroach. I mean, think about the cockroaches we're getting here, right? We've got Tricolor, then we have First Brands, then we have BlackRock on, what was it this morning? On the, what was it? Who was it? It was the telecoms. BlackRock, billion, telecom, bankrupt. There. BlackRock on broadband telecom and Bridge Voice $1 billion fraud. Right? Then we have Carvana's circular financing, which I broke down here. I just put a video on that, so let me grab that really quick. The only way I can keep this straight is if I write some of this down. Meet Carvana. Okay, there we go. Then, let's see what else we have here. Okay. Interesting. Okay, hold on one sec. Let me just tab in here just for a moment.
Moving the field forward. There's a lot still to be gained in this market, and we see a lot of the pharmaceutical companies and others that is very reliant on our technology continue to use Illumina, even though if we are not in China. But again, I believe that we will be able, and I'm hopeful we will be able to find a solution, long-term solution for China.
Well, Jacob, not to be dramatic, but on the topic of existential threats here, let's talk a little bit about the competitive landscape, because we got the news that Roche, of course, is launching its own DNA sequencer. I believe that's time for next year. I would love to hear, your thoughts on what this means for your business and your market share.
Yeah, look, we've been in this industry, the DNA sequencing industry, for more than 20 years.
Yeah, I don't care. All right, that's boring. Let me just, so there's no news over here. Let me check if there's any other news over here.
Just in line, and it'll probably be well received because it's a relief that things aren't really that bad. And by the way, those stocks are all cheap, like 15 times, 8 times earnings.
There's one stock in particular.
Pharma, man, I don't touch that stuff.
Supposed to go out at 5 o'clock to Dallas, scheduled to leave at 1:45 a.m. And I'm sure a lot of people flying into Newark for international flights did not meet their international flight.
Very important up. These are life or death matters. These delays, too, for the people who do continue to work, leaving at 1:45 in the morning. People are going to be exhausted. You want them functioning and doing their jobs.
Nobody has anything interesting to talk about. I'm surprised by this. So we talked about BlackRock. BNP Paribas helped BlackRock's private credit arm make the loans. So BNP Paribas, which is Brazilian, helped BlackRock make these loans. BNP. Okay. Oh my gosh, Kevin. I can't type today. Oops. Okay. So then we have, elected to be regulated as a business development company. Investment objective is to achieve high total returns through current income and capital appreciation with emphasis on principal protection. Right. We're going to make a high yield, but we ain't going to go down. Do these people actually make money? Let me see here. I mean, they probably do because they have the assets. Financials. Latest 10K. That's from February. Second quarter results. Investment income, $27 million. Okay. This is not a gap statement at all. Company share repurchase plan. Assets. $1.5 billion in assets. But their costs are higher. So their assets have actually lost value based on what they're saying. Investments at fair value. Now, how do they list these as fair value? Like, who determines that fair value? Oh, because they have management fees. And they waived a bunch of their management fees. Why? Because are they losing money? Reducing non-accruals, which declined to 3.7% of the quarter. No, okay. Let me look at the actual... On a GAAP basis, net income was $27 million. Total investment, acquisitions, and dispositions. Okay. Fine. Timing of investments, decline in NAV. So net investment income declined because they have fewer assets under management. How do they do this? The company determined fair value. Costs paid. Fair values effective at the time of the merger. So this is quite funky, how they determine these values. But anyway, there's basically, you've got this, whatever you want to call it, fund. Here's the 10K. And they have debt of $1.1 billion. They've got assets, but they're upside down on the assets, right? Yeah, look at this. So this fund has made investments of $1.9 billion that are currently worth 1.7. So I find that very interesting. So clearly there's some loss being pumped into here. Okay. Like they're holding a bag, right? Per last 10Q, they're holding a bag. 1.792 billion of assets versus 1.964 billion of cost. That's a decline on their assets of 1.792 divided by 1.964. It's a decline of about 8.5%. And as a result, I think that's why they're waiving some of their management fees. Aha. Okay. Interesting. Okay. So let's keep going with this company here. So apparently, flood of past tips from employees. So employees say they're getting fired. Reborn Cabinets shared the contents of an email. Driver for a distribution firm on the West Coast was told to return a truckload of supplies to his office. In the closure has been murky. Text messages. Text to employee on Tuesday. The email to employees was short and lacking details. We regret to inform you that Reborn Cabinets has made the very difficult decision to immediately cease business operations. Effective today. This is written by an attorney. Wow. Your health insurance benefits will end on Halloween. We want to thank you for your Wow. This person's been on the phone for 45 minutes here when they took this screenshot. Jeez. Reborn Cabinets subsidiary email. Okay, that's very interesting. Yeah, this is fun. This is like the cockroach shit situation is turning into a disaster. More cockroaches. Okay. Across markets, homeowners have reportedly prepaid deposits. Homeowners described crews beginning demolition work and then disappearing. Phone calls going unanswered. Uh-oh. Practical steps. Renovo Home Partners reportedly shutters. Multiple regional brands left with unfinished projects. Renovo Home Partners, the private equity-backed roll-up that built a national platform of home improvement firms, appeared to abruptly cease operations this week, leaving customers with unfinished operations. Huh. Non-accrual status means loans or asset is no longer earning interest because the borrower is significantly... Oh. Yeah. I mean, that makes sense. Okay. So, commenter, you're going to make it onto the Meet Kevin app. Ogie says BlackRock moved some income to non-accruals, suggesting they saw a lack of income pending from loans. Interesting. So it'd be nice to... I'm going to leave that there as a note to verify and go find the docs. Affected brands include Remodel USA, Reborn Cabinets, Allure Home Improvements, Darkened Offices. Wow. This is a crazy line right here. Because local reporting from Minnesota and other markets show darkened offices, crews that stopped arriving at job sites, and customers saying large deposits vanished into limbo. That's crazy. Several news organizations were reportedly told that Renovo's parent entity had filed for bankruptcy, yet public records find no evidence of that yet. The shutdown was abrupt. Former employees told local broadcasters they were notified in the morning, but there's no warn notice, no bankruptcy filing yet. Website confirms closure. Several well-known brands in Renovo's portfolio post as notices. Well, let's try to look some of these up. So let's go Reborn Cabinets, Dream Style Remodeling, Minnesota Rusco, New Pro, Remodel USA, Woodbridge, and Allure Home Improvements. No way! Allure can't even get its handshake to work. Woodbridge, I don't know if this is them. This could be anyone, because that says Woodbridge Construction, but the other one just says Woodbridge. Not Rebath. Remodel USA. Oh, nice reviews. Yeah, Remodel USA partners with National Platform. So what's their website? Yelpers report this location is closed. Oh, this is out of LA. Ask who. Let's see here. Filter by newest. Oh, this is from 23. Do not even consider this company. Okay. Yeah, here is where they talk about this direct-to-consumer platform with Renovo when they partner with them. Okay. And then this is New Pro. New Pro, I guess, is one of the brands. Everything's canceled. New Pro. Oh my gosh, all the websites are just taken down. Minnesota Rusco. We regrettably inform you they've ceased operations, is what the Google byline says. Their website won't even load either. Holy smokes, dude. Closes after 70 years.
Scrambling tonight after Minnesota Rusco unexpectedly closed its doors.
Wow, dude, this is an SH9T show. Dream Style Remodeling. Dude, are you kidding me? Holy crap, man. Reborn Cat. Bro! Oh my gosh, bro. All the websites are rugged. Holy smokes, man. What's going? Jeez, man. This is scary. I'm laughing out of fear. I don't know what to make of this. How many people work there? $814 employees. Dude. I wonder what Twitter has to say about this. Renovo. What is this? Somebody here wrote, Kevin, a builder owes me $44K on a home remodel. It's been over 2 months. Apparently the homeowner hasn't paid. What should I do? You file a mechanic's lien, right? That's your protection. So it's a pain in the ass, but you have to file a mechanic's lien against the homeowner to get your money. Woodbridge is based here in Dallas. We've subcontracted with them. I always thought they were growing too fast, if this is the same entity. This is very interesting. Renovo Home Partners blow up is showing up in local news outlets. Renovo Home Partners was a PE roll-up that went under, private equity. Classic PE foolery. Wow. Oops. Same company recently bought the second largest power company. Okay. The private equity firm is Audax Private Equity, consolidating several businesses. Renovo shutters operations. Wow. That was last year. Very interesting. Looks like Audax Private Equity just bankrupted Renovo. This is very interesting. Very interesting. Let's see. Renovo Home Partners. Resco employees blindsided. Yeah, that's crazy. Oh, did Joe Rogan drop a potty with Elon? I mean, you definitely spammed that a lot. I mean, we're right in the middle of something, but Elon Musk. Let's see. But I don't think they've posted. Have they not posted on YouTube yet? Oh yeah, 7 minutes ago. 3 hours.
Yeah, like a little miniature alpha fella.
It's like a noodle.
I support this activity.
That's
a real dude.
I don't have much patience for these like 3 hour things.
It's suicide, but doesn't look like. Are you? Yeah.
The wires to.
Is there a transcript on this? Because if there's a transcript, I can go to the fun stuff. Transcript. Ooh. Cybertruck. All right, perfect.
Yeah, well, that's cool that you're concentrating on the aesthetic. I mean, that's kind of the whole deal with Cybertruck, right? Like, it didn't have to look like that.
No, I just wanted to have something that looked really different.
Is it a pain in the ass for people to get it insured because it's all solid steel and?
I hope it's not too much. Tesla does offer insurance, so people can always get it insured at Tesla. Well, but it is the form does follow function in the case of the Cybertruck because, as you demonstrated with your armor-piercing arrow, because if you shot that arrow at a regular truck,
it would go right through it.
Yeah, exactly. Right, you would have found your arrow in the wall.
Yeah.
It would
at the very least, it would have buried into one of the seats.
Yeah. It's but like you could definitely get enough of bow velocity and the right currency like the Federal Reserve can.
And so their ability to balance budget is dependent upon illegals getting funding?
The scam level here is so staggering. So there are hundreds of billions of dollars of transfer payments from the federal. Like, did you see designs for the sort of the robotic bus?
No.
It looks pretty cool.
The robotic bus? As opposed to being totally autonomous
we need to
bus?
actually figure out the good name for it. I think called the debt crisis and to prevent America from going bankrupt is AI and robotics. 7 years.
And so the only way to fix that, robotics, manufacturing, raise GDP.
You've got to basically massively increase the economic output, and the only way to do that is AI and robotics. So basically, we're going bankrupt without AI and robotics.
The jobs that are going to be lost because of AI and robotics, the jobs due to automation, the jobs due to...
Because you'll have robots plus AI, universal high income, not just universal basic income, universal high income, meaning anyone can have any products or services that they want.
So
But there will be a lot of trauma and disruption along the way.
So you anticipate a basic income from that the economy will...
We've heard all of these arguments from Elon before.
Of AI and robotics enabling prosperity for all, an abundance of goods and services.
Somebody writes here, really interesting dynamic between subprime auto, immigration, and construction. Here in Dallas-Fort Worth, I have a front row seat. I'm also bilingual and work in real estate and construction. That's a really good point, especially if they're so affected by immigration as well. Yeah, that is interesting. But I'm not seeing anything here on Optimus. I was hoping to see something else on Optimus. This seems like a political rant. So nothing on Optimus. How about a new model? The word model isn't used. Cybercab doesn't come up. Cybertruck comes up in terms of looking unique. How about Tesla? Right before the shareholder vote goes on here. Not a surprise. I just don't... I have no patience for this 3-hour thing. Especially since a lot of this crap we've heard before.
Tesla's focus is autonomous cars, building kind of futuristic autonomous cars.
Taxis not even mentioned. Any Epstein talk?
I think we want the future to look like the future. Did you see designs for the sort of the robotic bus?
No.
It looks pretty cool.
The robotic bus? As opposed to being totally autonomous
we need
bus?
to actually figure out the good name for it. I think called the Robus or there's no good. There's it needs to be reform in California.
Well, the crazy thing that Newsom does is whenever someone brings up the problems in California, he starts rattling off all the positives. The most Fortune 500 companies, highest education.
The homeless population doubled or something. People don't understand the homeless thing because it sort of preys on people's
empathy. This could be interesting.
What the fuck? All right, what the fuck?
Town Square still,
right?
What links show up in group texts? If I'm in group chats with friends, what links are showing up?
That's what I try to do now. California's doing, and it's like a giant chunk of it's happening in California. The most preposterous things that California.
This section I'll watch. I'll watch this section in just a moment. We'll watch it together. But I'm going to get another cup of coffee because that's what I do. Okay. I'll listen in.
Point that you make, and maybe that will actually tell us a bit if we start seeing briefings across the aisle on Capitol Hill. I know that the Pentagon has not been terribly fond of talking to Congress at all lately. But, General, we've seen B-1 bombers and B-52 bombers buzzing Venezuela's airspace. We also saw Venezuelan F-16s buzz a couple of U.S. ships weeks ago when we first started striking these alleged drug boats coming out of Venezuela. You mentioned the fact that they do have some aircraft. They've got anti-aircraft missiles and the like. What kind of a job would it be for us to knock all of that out, or would there in fact be an air war over Venezuela?
You never want to discount an adversary. So, yes, they've got pilots, they fly F-16s, they have some air-to-air weapons, but they don't have the modern air-to-air weapons. They don't have the system that we have. So there might be an air war over Venezuela. They might get some aircraft actually off the ground. But in terms of our ability to reach out and strike, our ability to use stealth, our ability to name the time and manner of attack and so forth, I don't think there's any question about the outcome. And the Israelis have really pioneered this. In their operations, they typically strike, they're effective, they're using our technology. Of course, we know all those systems. I wouldn't think there'd be much of a problem, but for the pilot in the aircraft, hey, he's put his life on the line for the country. He's got to succeed, and we would do everything possible to make sure we can do this effectively without losses.
Yeah. As we're speaking, General, we're showing images, video of some of the alleged drug boats that we've blown up recently. Too many to count at this point. There was a sub. We've got the boats as well. This is quite a gallery that we have of these things blowing up and catching on fire. A lot of people have died. As someone who actually ran Southern Command, what is your thought on the legality of this operation so far?
Well, it should have been briefed as legal. Presumably, there's some legal authorization to it. We haven't been told that. The evidence that has been presented to Congress, at least as it's been explained publicly, doesn't fully justify that we know for sure that these are drug boats. And if they are, then it would be a violation really of maritime norms to attack them. We would normally seize and secure them, use them to collect information, and then run it back to the source.
Yeah, you can't get any information from dead people that you just bombed. That ain't gonna work. Oh, man. All right. So. All right. So what, we're gonna look at this Rogan thing. And then let's go see what's going on in the market here really quickly. Wow, Dave & Buster's under $15. Dude, you just can't touch the consumer place. Wow, the Q's at 19 bips. Dude, we lost 630 hard. Bro, but Netflix still 3%. Let's go. Let's go. Huh. Still can't help but be very curious about this. All these little like feeder funds. This has been around since 2012 though. Very interesting. All right. So let's see what what the rant is here on California. Joe Rogan and Elon Musk doing what they do best, ranting on California, which, by the way, is kind of perfect timing because OpenAI just got authorization to dilute their shareholders, to break down their nonprofit structure and become a for-profit structure, paving the way for them to be a $1 trillion IPO per Reuters at the end of 26, early 27. That said, pisses off Elon because Elon obviously left California, and so did Joe Rogan. And so let's listen to what they have to say about California.
Like a giant chunk of it's happening in California. The most preposterous things that I get.
Yeah.
And then you got
crazy.
Gavin Newsom, who's running around saying we all have California derangement syndrome. He's just like ripping off Trump derangement and calling it California derangement. It's like, no. The fucking, how many corporations have left California?
It's crazy. Like,
hundreds.
Yes, hundreds.
Right? Hundreds.
Yes.
That's not good.
Not Chick-fil-A. I mean, I think In-N-Out left.
Yeah, In-N-Out left. They moved to Tennessee.
Yeah.
Yeah. They're like, we can't do this anymore.
Right. And
it's
like
the California company for food. It's
Yes.
like the greatest.
I get the California derangement syndrome thing a bit. You have to understand, I live in Southern California. Southern California wins because it has the best weather in the world. Northern California is the coldest summer you'll ever experience, but it gets so much attention because that's where the VC bros are, right? That's where the money is. And San Francisco is going to bounce back. But what you really have is a political structure that has gotten so extreme in terms of anti-business and anti-development and anti-growth and anti-construction. It's really hard to do things as a business owner. So it makes sense why Elon and Joe Rogan are frustrated. It's really great for real estate investors because the building departments are so dumb that they brag about wanting more housing, but they stand in the way of actually letting people build. So you don't end up getting more housing, and you end up making housing more unaffordable. And so it's a place with a lot of jobs, but the terrible politics of it all make housing more expensive. So Newsom is heavily to blame for the terrible politics. He sucks.
Hamburger place ever.
It's awesome.
Yeah.
Yeah, I'm not actually speaking of like just sort of open source and like looking at things openly. Like I just like going in and out and seeing them make the burger.
Yeah, it's right there.
They chop the onions and they it's you just see
why are we
everything
talking
getting
about
made
burgers?
in front of you.
Yeah.
You need to say that it needs to be reform in California.
Well, the crazy thing that Newsom does is whenever someone brings up the problems in California, he starts rattling off all the positives. The most Fortune 500 companies, highest education. But yeah, that
Elon salts for now. I mean, sure, well, that's because California is still living off the golden age of the 80s, where the computer revolution, Silicon Valley was born in the 80s and 90s, right? And so Newsom's really riding those coattails. Like, he brags about all of those features of California, but they weren't because of him. They happened in spite of him.
It was all already there
right.
before you were governor.
But how many Fortune 500 companies have left California?
Right. And then you guys spent $24 billion on the homeless, and it got way worse.
Yes.
Yeah, well, mostly because they throw money at these nonprofits that promise to solve homelessness, who pay their CEOs big fat salaries, and they get nothing done. I ran for governor of California. I had a plan to get it done.
Like the homeless population doubled or something. Like people don't understand like the homeless thing because it sort of preys on people's empathy, and I think we should have empathy, and we should try to help people. But the homeless industrial complex is really it's dark, man. It should be that network of NGOs should be called like the drug zombie farmers, because the more homeless people and really like when you meet like somebody who's like totally dead inside shuffling along down the street with a needle dangling out of their leg, homeless is the wrong word. Like homeless implies that
do people shove the needles in their legs?
That somebody got a little behind on their mortgage payments, and if they just got a job offer, they'd be back on their feet. But someone who's you see these videos of people that are just shuffling, they're on fentanyl.
It's terrible. No, he's totally right. Like the homeless situation, this shouldn't be allowed, whether it's Philadelphia or California. It just shouldn't be legal.
They're like, taking a dump in the middle of the street,
it's disgusting.
And they got like open sores and stuff. They're not like one job offer away from getting back on their feet.
Right. This is not a homeless issue.
Homeless is it's a propaganda word.
Right.
So. And then the these sort of charities in quotes they get money proportionate to the number of homeless people or number of drug zombies.
Right.
So their incentive structure is to maximize the number of drug zombies.
Well, you can't solve the problem by paying people based on how many homeless people you're treating. You have to solve the problem ubiquitously across the whole chain. You got to get people off the street to stop them from dying. You got to get them into a place where they can actually have a clean shower and a clean bathroom, where they can get access to mental health services. Because guess what? If you're drugged up, you can't get a job. If you're stinky, you can't get a job. If you don't have a clean shave, you probably can't get a job. right? So you got to provide these facilities and solutions, but then you also have to invest in preventing the mental health crisis in the first place, or the affordability crisis in the first place. The affordability crisis is heavily driven, and this is why people are called homeless, by how expensive housing costs are. California has suitable weather for living outside, whereas much of the rest of the country does not. So it's understandable California has a lot of homeless folks as well, because it's a more survivable place. But then, of course, the policies have encouraged it, so it's kind of like both. And at the same time, you're not solving or preventing more people from becoming homeless, because you're not fixing the housing problem. You need to build more homes. You need to have mental education at schools. You need to have better mental health services. People who actually need the mental health services, most of them can't afford it. If you wait for a public health mental health specialist, you're probably waiting 3 to 6 months. By then, you're knee deep in drugs and alcohol, and you're screwed. You're not going to go to your appointment anyway. If you want to get a private healthcare specialist, most of them aren't even taking insurance because they don't have to. There's so few mental health specialists that the private ones, the actual good ones, that are willing to take you on a relatively rapid basis, right? That this is not to say people who work in public mental health aren't good. It's just to say they're backlogged. It's to say that the private ones who are good and available charge you an arm and a leg, and if you're broke, you can't afford it anyway. So the whole system's broken. You got to solve it all. People got to stop dying on the streets. You need government intervention. You got to consolidate the services. You got to funnel money into mental health. You got to funnel money into drug and alcohol prevention. All of it needs to be done systematically from the top. The only person who could do that is Newsom, but he's a little bitch. He's never going to do it. The reason he's never going to do it is because he doesn't want to do something big and risk screwing up his opportunity to run for president. So he'd rather ride on the coattails of what California has done over the last 40 years than stand for his own bullshit. Because that's who he is. You know, he's, the masks are for you, not for me, as he's dining at the French Laundry. The guy's a scumbag. He's a politician. I mean, that's redundant.
Minimize it. Right. That's why they don't arrest the drug dealers. Because if they arrest the drug dealers, the drug zombies leave. So they know who the drug dealers are. They don't arrest them on purpose. Because
I disagree with this. I think this is a little Elon propaganda here. But the other problem that you have in California is you just have a lack of funding for law enforcement. And a lot of these people, just because of the judicial system, I hate to say it, but a lot of these people, they get arrested and then they get released. And then it's like, whoa, they're back on the street. You know, whether it's cashless bail or whatever, they're right back on the street. And then it's like, bro, you know, you actually de-incentivize law enforcement from actually enforcing the law from that sense, because these people get right back on the street. I mean, I remember being in law enforcement in South Florida, and we'd be like, bro, well, we could go arrest this scumbag. He's going to be right back. He's just going to bail out. He's going to be right back on the street. When is the legal system actually going to take care of these people?
Because otherwise, the drug zombies would leave, and they would stop getting money from the state of California and from all the charities.
Wait a minute. So you say
it's dark, man.
Is that real? So they're in coordination with.
This, I think, is speculative. I disagree with a lot of this, but I understand where Elon's coming from.
Law enforcement on this.
Yeah.
So how do they have those meetings?
They're all in cahoots.
Well, when you find this,
that's probably true.
This is a diabolical scam. So San Francisco has got this tax, this gross receipts tax, which it's not even on revenue; it's on all transactions, which is why Stripe.
Keep in mind, Elon, I think, gets manipulated by these conspiracies that circulate on X, and he kind of amplifies a lot of these. Don't get me wrong; I'm not here defending California. I just say, like, some of how far extreme Elon goes, you kind of got to taper down a little bit.
And Square had and a whole bunch of financial companies had to move out of San Francisco because it wasn't a tax on revenue, it's a tax on transactions. So if you do, like, you know, trillions of dollars transactions, it's not revenue, you're taxed on any money going through the system in San Francisco. Like Jack Dorsey pointed this out, and they said, like, look, that they had to move Square from San Francisco to Oakland, I think. Stripe had to move from San Francisco to South San Francisco, a different city. And that money goes to the homeless industrial complex, that tax that was passed. So there's billions of dollars that go, as you pointed out, billions of dollars every year that go to these non-governmental organizations that are funded by the state. Like this, it's not clear how to turn this off. It's a self-licking ice cream cone situation. So they get this money. The money is proportionate to the number of homeless people or number of drug zombies, essentially. So they try to keep they try to actually increase, because that like in some cases, like it's somebody did an analysis. When you add up all the money that's flowing, they're getting close to $1 million per homeless per drug zombie. It's like $900,000, something like some crazy amount of money is going to these organizations. So so they want to keep people just barely alive. They need to keep them in the area so they get the revenue. So
what Elon's really leaning on here is this idea that the nonprofits who are designed to help the homeless folks, they get funding because you don't have a centralized solution. Newsom is to blame for that. If you had a centralized solution in California, you wouldn't have this problem where you're disincentivizing people from keeping them basically sick. It's sort of like healthcare, right? It's not really healthcare, it's sick care. You're incentivized to keep people reliant on your pills and, your handouts.
So that's why, like I said, they don't arrest the drug dealers, because otherwise the drug zombies would leave. But they don't want to have too much. If they get too much drugs, then they.
Let's fast forward a little bit.
It's progressive. Most out there left-wing DAs, they get them into office.
We've got that issue in Austin too, by the way.
Yes, we
do. You see that guy that got shot in the library?
No.
I heard about a guy got shot and killed in the library. I think that was just like last week or something.
Right.
So some friends of mine were telling me that like the library's unsafe. Like they took their kids to the library, and there were like dangerous people in the library in Austin. And I was like, dangerous people in the library? Like that's a strange. It basically get like.
This is a reference to the Austin Central Library shooting on October 25th.
Drug zombies in the library.
Oh Jesus! And that's when someone got shot.
Yeah, I believe this should be on the news. We might be able to
in the event. Before that shooting, Keaton was accused of shooting another person in a bus incident, and after reportedly pointing his gun at a child.
Right.
It says the victim told PISA confronted the suspect to make
You got cases where somebody's been arrested like 47 times.
Right.
Like literally, okay, that's just the number of times they were arrested.
Right. Well, this is like unfortunately normal about crime in America, as the recidivism is very high. Like once you're on the road of crime, you kind of keep criming.
Times they did things. Like most of the times they do things, they're not arrested.
So lay this out for people so they understand how this happens.
Yeah, and the key is like this: it preys on people's empathy. So like, if you're a good person, you want good things to happen in the world. You're like, well, we should take care of people who, who are down in their luck or having a hard time in life. And we should. I agree. But what we shouldn't do is put people who are violent drug zombies in public places where they are
the Patient Center and was sending these
conflict of interest.
Yes. So sending people that they were charging to a rehabilitation center instead of putting them in jail, profiting from this rehabilitation center, letting them back out on the street.
Yes, and
violent, insane people.
And they're, in that case, I believe that judge has no law degree or a significant legal experience that would allow them to be a judge. They were just
now we're talking about
calling
Nazis.
everyone a Nazi. Like I think they've called you and me Nazis. I'm
I'm a Nazi. I think. I have friends that are.
I hate to say it, there's not a lot of substance in this. This is kind of boring. I hate to say it. Kind of boring. So I'm a little disappointed in that. So I'm gonna be done with that. All right. What else?
Looking at turnout in Fairfax County, a competitive county that has been trending more blue than red in the last few cycles, and the turnout as of today is on the same par level as a presidential election. And remember, this isn't even a midterm. This is an off-year election, which means turnout usually is off. And so the fact that you've got that level of activity at the ballot box before Election Day, it usually indicates that you've got a change election coming, which would of course advantage the Democrats in this case. But I got to believe that you have that kind of a strong move in Fairfax County. It is a direct corresponding factor to the.
Yeah, this is boring too. All right, what else? So we've got credit market hit with 200 billion flood of AI-related issuance. U.S. companies have issued more than $200 billion worth of bonds to finance AI infrastructure. Yeah. Increasingly tapping debt. The Zuck, $30 billion. We talked about that. We broke that down. Banner year for AI issuance. Blah, blah, blah. Okay. Why I love the IMF Global Stability Report. It was a good report. I mean, we read chunks of it too. Especially the private credit issue. All right, what'd they say? Latest report has me brooding, however. Compendium of the worst stuff leaking beneath the calm waters. But it comes with data, rather than some doommonger on CNBC rabbiting about government debt or whatever. Lots of it doesn't bother me. Fine. I don't really care if ETFs and blah, blah, blah. Two risks leaps out to me. There it is. The rise of the interconnectivity between traditional banks and non-banks. Yes. This is a huge issue. COVID aside, all financial crises have involved the biggest lenders. Right. This is the private credit stuff that we're seeing in the same thing that we're seeing with this renovation company going BK. Mega banks are lending to non-banks at an ever-increasing amount. In the United States, they account for 90% of all loans. That's straight. He lifted that straight from the report. We covered that too. U.S. loans to private equity have jumped by 60% in the fourth quarter of 2024 and the second quarter of this year. Right. Right. It's getting worse. Naturally, the IMF stress tested the adverse scenario hitting these loans. You don't want to know. The next thing that spooked me, right? Well, and they didn't even assume bank bankruptcies, which was crazy. Corporate margins and downgrades heading south. Yeah. And the person's not wrong. That was a good, the financial stability report was great. Let's see what else they have. Corporate job losers mount amid tightening economy. Fed eases debt concerns. QT ending. AI bubble has reached the fried chicken phase. This is insane, dude. Can we see a video of Jensen eating the fried chicken? Because I thought it was Jensen signing the tit that was going to be the top. It turns out now it's... What's this mean? What the hell? How is this in the Financial Times? Dude, look at this. Morgan Stanley produced an OpenAI-focused chart a few weeks ago to illustrate the phenomenon. And then here's a person, like, sticking their head up their own butt. And then the meme. They're the same. Dude, how does the Financial Times put this in here? Oh my lord. That's great. That's classic. Oh my lord. Okay. Jensen fried chicken.
FNB are sizzling. Shares jumped as much as 20% on Friday, and poultry processor Cherry Bro soared by the daily limit of 30%. All because NVIDIA CEO Jensen Huang had chimek, that's chicken and beer, with Samsung's JY Lee and Hyundai's Chung Yi-sun at Seoul restaurant Ganbu Chicken. And the photo, well, it's gone viral. Ganbu's not listed, but investors were hungry for anything related to fried chicken. Nurumeka, a
Man, this just shows this market is broken. It says, Amazon earnings call should have submitted any doubt that AI is profitable. What? Because of AWS? I mean, that doesn't mean that the underlying is profitable. It just means that they are able to sell the server space, right? Let's see, AWS, Amazon, investor relations. Let's see here. Third quarter results. And I like Amazon, don't get me wrong. I think financially they've got some great things going on. But let's see here. Amazon Q3 earnings press release. Oh, they went in depth on how their customers are recognizing revenue on building AI agents. Yeah, let's see about that. Let's see here. Wow. We're almost at $1.5 million fundraised for HouseHack. Almost. I don't know if we'll hit it this month. But that's in 1 month. That's insane. I'm pretty sure that's got to be like our best month this year. I got to double check that too. But that's pretty good. We'll put it to good use. Okay, so Amazon. People want to diversify. That's my guess. People are trying to diversify away from the insane valuations that are out there. And I don't blame that at all. I mean, I feel the same way. I'm putting more of my own money into HouseHack too. So unlike the Carvana CEO, I want to buy the stock, not sell the stock. I want to buy HouseHack stock. I just want to own more of it. So, okay, let's see here. Agents. Okay. A lot of future value companies will get from AI will be in the form of agents. Yeah, we'll see about that. Companies will create their own agents. Will create. So this is a Hopium thing. Okay. Agent Core. We launched Agent Core to help deliver workforces. That's fine. I agree that agents will reduce medical. That I agree with this on medical for sure. I think Amazon's going to be a huge beneficiary of people, firing workers. Not only Amazon firing workers too because of AI, but because of people running AI models. I agree with this. More than 1 million Trainium 2 chips by the end of the year. Why do they gotta call them tranny chips? Tranny chips continue to see strong adoption. Yeah, good for you. We work closely with AMD, Intel, and NVIDIA. Let's go look at their actual numbers here. Okay. Let's see here. Cash flow. Net cash provided by operating activities. Oh, wow. They went to zero cash flow, bro. Holy smokes. Cash flow is now zero. Where are they getting their cash from? Cash flow now zero. Free cash flow, right? And then financing. Oh. I mean, that's relatively flat because they paid down and then they borrowed. Flat financing here. Yeah, so they borrowed as much as they paid down. Okay. Fine. Here for margins, okay, here's where the money's coming from. Oh, this is nice. Product sales, operating expenses, net income came down to 21 billion. That's still pretty good, man. $2 of earnings. What's their valuation cooking right now? Let's write this down. Let's go pull a valuation for them. So, stock tab, Amazon. All right, let's drop them in here. So, Amazon. Let's see what they're cooking. Amazon. Okay, so Amazon right now, what are they trading for? Like 250? Something like that. And then let's actually get 246. Okay. Forecasts. We are bumping. What are we bumping? We are looking at earnings per share of $8.58. That checks out with the $2 we see here. $8.54. We're going to go on a growth rate for EPS. 9.8, 24.1, 15.3, 15.4 divided by 4, about 12.6 per Wall Street. Honestly, I think they'll grow more than that. You know, I'm going to put them down at a 15% growth rate on EPS. That's going to be my take. Let's see what their PEG ratio comes out to. So this is Amazon, Wall Street, next 4 years has Amazon at a 12.6% EPS growth rate averaged each year. I'll put them at 15%. And then obviously they're a servicer, so let's see what their PEG comes in at, 1.93. That actually puts, per Kevin, fair value would be 15 times 8.54 times 2.67. That's my current fair value for Amazon. 342. 342. Amazon biggest risk factor is that they're so, you know, heavily exposed to the consumer, right? So big risk factor, heavy consumer exposure for consumer slowdown. However, they'll be a huge beneficiary from robotics in factories and in AI adoption at corporations via AWS. I totally believe that. So you have this dual, like double-edged sword at Amazon. Okay. Now, let's see. Cash flow went to 0. We saw that, which was a little disappointing. EPS, that's fine. Okay. Let's see AWS. Here's growth. North American segment, AWS. So AWS, this is the year-over-year growth. AWS accelerating, right? I look at that acceleration. That's really nice. And if I grab an arrow tool here, I can make this a little bit more obvious because we're reading from left to right over here. So 20% AWS growth, that's quite nice. Net sales, and they're also growing over here on their product sales. It's pretty good. Online stores, 8%. Advertising services also growing really nicely. That's good. There's AWS at 20%, which is huge. Wow, they actually cut their sales and marketing by 18%. That's pretty impressive, honestly. Gotta give Amazon credit here. These are very good numbers. Let's see here. Okay. Go into this. Oh, look at this. Now this is interesting. Look at this. Third quarter net income includes pre-tax gains of $9.5 billion in non-operating income from our investments in Anthropic. Why? Why are they showing that in here? Why are they including that? Why do you mark that to market? Is that to pump EPS? That's a little odd. Now, why'd they do that? Other. Well, that's bull crap. How much did they put in there? From Anthropic. $9.5 billion, bro? Holy smokes. Other income. Now, why would they mark this up? To recognize it. Because now they pay the tax on it, right? But wait a second. 9.5 billion due to Anthropic markup. What the F? Okay, so if I took that out, dude, that would tank. So their income taxes, what was their income tax rate? Shit. Sorry. Oopsies. All right. Provision for income taxes, 6.9 divided by 28. 24.6% taxes. So if I back this off, net income inflated by 9.5 times 0.754, 7.1 billion. Net income would have fallen year over year if not for Anthropic. What the F? Bro, that's bull crap. That's actually bull. Wait a second. That totally skews the EPS. Which ruins the valuation. Right? Because if it weren't for the Anthropic gain, 21,187 minus, yeah, they'd be at 14 billion. 14 billion in net income, which would be a decline of, divided by 15.3, 8.5%. Now that's very interesting. Severance, was there severance in here? Severance charges, operating income, but that's only $1.8 billion. So you could add that back in, but they're going to fire even more people, right? Without that, operating income would have been 21.7. So even if you added back in 1.2 billion in severance costs, you'd be flat, right? So think about that. Amazon's, without recognizing a gain on Anthropic ownership, Amazon would have seen net income decline 8.5%. Flat if you add back severance. Earnings showed, you know, what they pitched though was a gain of EPS of 1.98 divided by 1.46. 35% EPS growth. Wow. That's interesting. Amazon told us earnings per share were up 35%, but without recognizing a gain on Anthropic ownership, Amazon would have seen net income, would have seen earnings per share basically, EPS, net income decline 8.5%. Flat if you add back severance. No growth. No growth without Anthropic investment. Odd. And free cash flow went to zero. But it's definitely odd. That's very interesting to me. Why is that there? There we go. And that really does mess up the valuation because the EPS growth is based on that, right? That's annoying. So, going back to the actual documents here, that's kind of lame. What else do we have here? Free cash flow decreased, driven by purchases of plant, property, and equipment. Strong momentum in AWS. Yeah, AWS growing was nice. How are the AWS margins, though? So, like, how price competitive are they, right? Well, I don't know. I guess let's find out. Margins, segment information. Do they have margins here? Sales growth, sales mixed, operating income. Here we go. AWS. Look at that. That's margin compression. Operating income's only up 9%, where net sales are up 20%, right? That's very interesting. This is margin compression. Margin compression in AWS. You're selling, you know, AWS up 20%, but operating income up 9%. So the way to look at that is, AKA, let's say you sold $100 of lemonade, next year $120, right? But you made, I don't know, and made $10. $10. Next year, 120 sold, you made, which would be a 20% gain, and now you only made $10.90. That means that full 20% growth got eaten by some margin compression. Otherwise, earnings would be $12, right? If margin stayed stable. Could be more depreciation, right? That's possible that it could be more depreciation, but it is actually interesting. So, you know, again, net sales growth is nice, but how was their margin over here? So their margin over here also, you know, compressing, right? Because look at this. I have 4.5% operating margin North America over here in terms of growth, but I have 11% on the top line. But margin growth is collapsing. Now that is very interesting. Somebody says Amazon is one of the few actually demonstrating the AI profit story. Well, what do you mean? Because they're not demonstrating the AI profit story. What they're doing is they're showing you that they can continue to sell data centers to people, which is fine. That's good. But I'm just trying to understand the conclusion you're making, because that seems a little, I don't know where you're getting that from. Like, I'm not seeing that in the report. So this is very interesting because you literally, okay, I mean this is green check mark, right? Because it's a fact. Net sales growing at 11%, but Amazon.com margins only growing 4.5%. That's margin compression. Okay. Then this is a sign of pricing power going down, right? AWS net sales growing at 20%, but AWS margins only growing 9%. That's margin compression or a lot of depreciation, right? Okay. This is interesting because like I went into this really liking this, but now I'm getting frustrated. I went into this report really liking Amazon and their financials, but now I'm seeing a net income pump by, a Fugazi, how should I put it? Fugazi, how do you spell Fugazi? I don't know, whatever. Fugazi Anthropic valuation change, which, because it's private, changes with the wind, right? So that doesn't really matter. And then I'm seeing compressing margins at AWS and consumer sales. So that's not great. That's odd. What else do they say in here? So in terms of debts, I've got $178 million of current liabilities. I gotta blow through inventories because I've got receivables of 55 plus marketables plus cash. I've got 155 bill of cash, 34 bill inventories. They're out of cash, man. I've got 179 minus 18, 161 bill of bills to pay. I have just enough cash. I've got long-term liabilities of 80. That's a lot. 80 bill long-term debts. So it's not the greatest balance sheet when your free cash flow goes to zero, right? That's interesting too. Free cash flow fell to zero. Fugazi is spelled Amazon. Thank you. I guess it's onesie. A onesie? Are we talking about children here? I got 7. But who cares? I want more. It's the Little Mermaid song. What's that song called? Is it no, it's not Under the Sea. Lyrics. I gotta look it up now. Lyrics. But who cares? I want more. You want thingamabobs? I got 20. You want thingamabobs? I got 20. What is it called? Part of your world. That's it. Part of your world. But who cares? No big deal. I want more. Okay. So. Now that's very fascinating to me. What else did they say here? So, operating income is expected to be 21 bill. Well, that's to 26. That's operating. Okay. Zook's robotaxi service in Vegas. We did see that. I've personally seen that there. These are all the bullish things. Free cash flow decrease. We saw that. Here are the severance costs. There's the Anthropic 17.4 billion. Third quarter. Oh, and they had a $2.5 billion FTC settlement, though, in fairness. Very interesting. All right. Somebody says he grew up in... I never grew up in California. I grew up in Florida. You get your facts straight. Never let the facts get in the way of a good comment, though, right? Am I right? All right. Okay. All right, interesting. What else is going on? So, Dave & Buster's, the Q's. Oh, the Q's are coming back up again a little bit. MicroStrategy still up 6%. Nvidia's up 30 basis points. Oh, so they lost a little bit of the lead, eh? Huh. Logan joined. Are they talking about the Fed?
In the FOMC discussion, she will rotate onto the voting panel. That will happen starting next year. In the meantime, the Fed dated overnight index swap, a type of derivative contract used to manage interest rate risk, has trimmed the odds of a December rate cut to about 50%. With more on the U.S. economy and Fed policy, and here to help us wrap up the week, you've already heard from him today many times. Bloomberg TV and radio international economics and policy correspondent Michael McGee. He joins us here in the studio.
We were going to start with Fed Speak, but I want to ask you about that headline that just crossed about SNAP benefits. I mean, what is it? I think all of us, I put something out on X. I mean, when more than 40 million Americans are getting food assistance in what is supposed to be one of the richest or the richest country in the world, what does that mean about our economy? What does that tell you about our economy?
Well, that's kind of a political question. Obviously, economically, it doesn't suggest that we're allocating our resources in the best way. This is a big... SNAP's been a big political football in Washington, and it's even more so now because it's in the middle of this government shutdown argument. But the Republicans have said that along with Medicaid, they want people who get these benefits, they should work. But 98% of them or 96% of them, I think, are children in school or caregivers or retired people. So that doesn't really work either. So it's kind of it comes down to what kind of country do you want to have and how do you believe that you get there? Because there's certainly an argument that Republicans make that people should make their own way or that this should be handled privately by charities and things like that.
Well, that's what I wanted to talk about, Mike, is who picks up the slack in a situation like this. I have family all over the country, and we have, like many families out there, group text where we're talking about everything. And my mom and my sister brought up something interesting, and it's the idea that on Halloween, people are thinking about making available foodstuffs, like shelf-stable things that they can give away to people who might experience hardship if they are losing SNAP benefits. They're talking.
All right, let's get off this. Benchmarks. AI pressure has high prices, small stake, poached stars. Okay, what's this? Stock market, crypto, rally, boost private companies. Anduril, Amazon's cloud lifts. Yeah. No big deal for CoreWeave. Okay. That's boring. Musk says Tesla might unveil a flying car. What? Is it? Did I miss that? in the Joe Rogan? Get out of here, dude.
Called you a nut.
Okay. Apparently, Elon Musk is now talking about flying cars and Tesla potentially announcing a flying car by the end of the year. I think at this point, Elon's going to do or say anything to get his $1 trillion stock comp plan, but holy smokes, let's listen to this.
Can you say more? What do you mean?
Wait.
Well, you know, but I one thing I can guarantee is that this product demo will be unforgettable. Unforgettable.
How so?
So he's being asked about the Roadster. Okay. Let's go back a little bit because wait a minute. This is interesting.
Really?
Yes.
What is the tow limitations?
I mean, we could tow like a 747 in that with a Cybertruck. The Cybertruck is an insanely it is alien technology. Okay. Because it shouldn't be possible to be that big and that fast. That doesn't. It's like an elephant that runs as like a cheetah.
Yeah, because it's 0 to 60 in less than 3 seconds. Right?
Yes.
Yeah, and it's enormous.
I have it. I honestly, most of the time, have to put it on chill mode because it's just too strong for me. No, I love it, man.
What does it weigh? Like 7,000 pounds?
Yeah. There's different configurations, but it's about that. It's a beast.
Yeah.
Yeah.
So it's got 4-wheel steering. So the rear wheel
nice.
steer too. So it's got a very tight turning radius.
Yeah, we noticed that when we drove one to Starbase.
Yeah, very tight turning radius.
Yeah, pretty sick.
Yeah.
Are you still doing the Roadster?
Yes.
Eventually?
We're getting close.
This is partly funny because Sam Altman just tried to take a dig at Elon Musk. They took a dig on him on Twitter on X because Sam Altman basically posted an image of a story in 3 parts. And what he did is say like, hey, look, I ordered this Tesla Roadster in 2018 and I put, $45,000 as a reservation payment plus another $5,000. And then he emails, I guess yesterday, hi, I'd like to cancel my reservation. Could you please refund my $50,000 to reservations@tesla.com? And he gets an email back that the address is not found. And then he writes, I was really excited for the car and I understand the delays, but 7.5 years has felt like a long time to wait. And then, of course, this guy, Jack Altman, writes, you can't be worrying about $50K like this. And then, with a quote, whether we burn 500 mil or 5 bill or 50 bill a year, I don't care. And then Sam Altman, little brother energy is the worst. Okay, fine. But let's keep going here with just a little bit of context there on the CT. But let's go or on the Roadster. But let's listen
close to demonstrating the prototype.
Like how
and
close?
I think this will be. I one thing I can guarantee is that this product demo will be unforgettable. Unforgettable.
How so?
Whether it's good or bad, it will be unforgettable.
Can you say more? What do you mean?
Well, my friend Peter Thiel, once reflected that the future was supposed to have flying cars, but we don't have flying cars.
So you're going to be able to fly?
Well, I think if Peter wants a flying car, he should be able to buy one.
So are you actively considering making an electric flying car? Is this like a real thing?
Well, we have to see in the
demo.
Yeah.
So when you do this, like, are you going to have a retractable wing? Like, what is the idea behind this? Don't be sly. Come on.
Well, I can't do the unveil before the unveil. But
tell me off air then.
I think it has a shot at being the most memorable product unveil ever.
I wonder if this is a reference to the Roadster, because they've talked about putting rockets on the Roadster and then it basically gets air because it like is going to be so fast. This idea of like potentially Tesla releasing a flying car. I mean, first of all, just the idea alone, it's just the next phase of the cycle that you need to get this stock to just go to the moon as people approve Elon Musk's $1 trillion stock plan. But this is wild because, I mean, it's so hard for people to get eVTOLs, you know, to the state where you can actually get FAA approval and broad sales for them. So we know product demos are one thing and actual sales are another. But if anybody can do it, and Elon's talked about eVTOLs in the past, Elon's got the manufacturing set to do this. I don't know, man. This is a very interesting teaser here. I don't trust Elon's time frames, but I mean, from a hope point of view, damn, I like the sound of this.
It has a shot.
Yeah.
And when do you plan on doing this? What's the goal?
Hopefully before the end of the year.
Really? Before the end of this year? This is, I mean, we're almost
like in
November
a couple
1st.
months. Hopefully in a couple months. You know, we need to make sure that it works. Like, this is some crazy, crazy technology we got in this car. Crazy technology. Crazy, crazy.
So different than what was previously announced and...
Yes.
And is that why you haven't released it yet? Because you keep fucking with it?
It has crazy technology.
Okay.
Like, is it even a car? I'm not sure. It looks like a car. Let's just put it this way. It's crazier than anything James Bond. If you took all the James Bond cars and combined them, it's crazier than that.
Oh my god.
Very exciting.
Yes.
I don't know what to think
Is
of
it
that
even a
because
car? I don't know.
it's the limited amount of information I'm drawing from here. Jamie's very suspicious over there. Look at him. Excited.
I'm interested.
It's still going to be the same.
Well, you know what? I mean, if you want to come a little before the unveil, I can show it to you.
100%.
Yeah,
Yeah.
sure.
Let's go.
Yeah.
Yeah. It's kind of crazy, all the different things that you're involved in simultaneously. And, you know, we talked about this before, your time management, but I really don't understand it. I don't understand how you can be paying attention to all of these different things simultaneously. Starlink, SpaceX, Tesla, Boring Company.
Okay. I don't even really know what to make of this, but as somebody who analyzes Tesla a lot, I have a lot of enthusiasm, okay, especially as being a single pilot rated jet pilot. I love the idea of being able to fly because, like, dude, this would be a new way to put my license to use, okay? Like, I am licensed with the FAA to fly jets, baby. And if I could get Bitch and Betty in a Tesla, bro, dude, that'd be sick. Like, I want Cockpit Karen talking to me in, like, Grok voice or something, you know? Maybe we could get, like, this is what Bitch and Betty sounds like, by the way, when you come into land.
Come in here. Sync rate. Pull up. Go around, wind shear ahead, unstable approach. Sync rate.
Ahead. All of them. You're good. You're good.
500.
Speed's trending down. We're stable.
500.
Runway 22's all yours.
Anyway, like, dude, a flying car? That'd be sick. Dude, flying a jet is stressful. But, bro, a flying car from Elon? Will it have full self-driving? Or, like, full self-flying? Like, I don't know, man. Half of me is like, this guy's so full of shit. And the other half of me is like, and I'm here for it. I'm like, bro, where do I send the deposit? Like, where do I send the money? Where do I put my deposit down for a flying car? You know what we need to do? We need to have Grok make an image of a flying car right now. Create image of flying Tesla car. All right? Dude, like, I don't even know where to start. No, I need wings. Add wings. Add wings and a giant jet engine, like a single jet engine, right? But anyway, you can't even evaluate this because it'd be so far away from FAA approval. We can't even put this in. Oh, dude, yeah. Oh, why is it a Tesla on a Tesla? Okay, that's sexy. Yeah. Okay, now make the car red. And I need some more indication of wind speed. Like, so we can't even evaluate this because frankly, right now we have this promise of a Roadster we never got. We got the Cybertruck, which doesn't sell, which I own, which is a great car. I wish it sold more. I wish they had a van. I wish they had Sprinter vans. I wish they had more, right, of these vehicles. I think we need a cheaper you know, what's it called? Like a cheaper 4-seat car. That's what we need. They have the manufacturing skills to do this. I want more of this. Use only the right image and have it flying over the White House. Okay, cool. So, you know, the Optimus 2, they can't mass manufacture. The Optimus 2 is having major problems, so they have to redo the whole Optimus. So the latest car launches have flopped. The Optimus isn't mass manufacturable. Those are Elon's own words, right? Now that looks sexy. Okay. Now have it flying a bit higher and add wings out of the sides of the car. Okay. I'm going to have GPT make a prompt, and we're going to go side by side here. We're going to go create image, flying Tesla Roadster with jet engine. There we go. And style, I don't need a style. Just send it. Send it! Okay. All right. So, the left one is acceptable. It looks ridiculous. The right one has lost its marbles. Whatever. That's Grok for you. All right, so we'll give GPT. I mean, this will be the perfect Elon versus Sam Altman. So a lot of this is just ludicrous. I mean, remember, I got Starlink for my plane, and I was promised it, you know, oh, just 3 months, man, 3 months. So I gave him $150,000. After 2.5 years, I never got Starlink. And I'm like, just cancel it. Just give me my money back. In fairness, they gave me my money back. But, you know, eVTOLs, could Tesla pull it off? Dude, if anybody could pull off eVTOLs, honestly, I'd put my money on Tesla to do it. So from a hope perspective, I'm down. I love this. From a consumer perspective, I love this. And dude, the stock is going straight up right now on this news. Like, people are like, yes, please. Give me a flying car from Elon. So this is kind of clutch. I ship this. What are y'all saying in the comments here? Somebody says X-Wing Tesla. I have 3 kids and we have a Honda Odyssey. We would buy a Tesla if they had a minivan. I totally agree. I would too. Dude, this is a much better image, in fairness. Like, I like this image a lot. That one's decent too, but the jet's sideways. So, now more realistic, and add wings to side of Roadster. Yeah. All right, we'll see what it does. Okay, cool. So, sounds like a pay package stock pump to me. Totally agree. Totally agree. Somebody else says, nah, man, Joby Aviation. Kevin Schilling level sky high. Exactly. Yeah, maybe we can email reservation@tesla.com. Yo, sign me up for the flying car. Oh my lord. Somebody else here writes, flying cars equal a lot of deaths. Well, hopefully not. We don't want to see that. Somebody else has got to hide the tires. No, man, you need the tires. Because you want to be able to drive, right? You just want to be able to drive into your driveway, you know, drive out of your neighborhood. As you're on the on-ramp to the highway, you take off, and then you fly, and then you come land. You know, it'd be great. It'd be fantastic. So now we just need the actual flying car. That's what we need. Unfortunately, we'll probably have to wait for the Optimus first. Let's do Flying Cybertruck with jet engine and wings. We'll try the Cybertruck version. Then maybe people will buy it. And we'll get a cyber van. Flying car exists. It's called a helicopter. Bro, a helicopter's not a flying car. There's no wheels on it. You know how many chips that Roadster needs? Bullish chips. Yes. Do you know how many NVIDIA chips they will need for this flying car? All in NVIDIA. Honestly, not bad here by GPT. You know, I like the little wings it added here. Decent, okay? Not bad. Oh, bro. Look at the flying Cybertruck on Grok. This is so ridiculous. Oh my gosh. All right.
She covers the media, entertainment, the worlds of internet as well, which, as we know, have become so intertwined. She joins us from Los Angeles.
Laura, great to have you back. Hello. We got to start with Netflix and Warner Brothers. We've talked.
Yeah, talk dirty to me about Netflix.
And it was just after Netflix co-CEO Greg Peters was like, we're not interested in Warner Brothers. You said that even though Netflix doesn't do big acquisitions, you did note that they must buy established IP, intellectual property, you know, and...
I wonder if they'll have LiDAR.
Do you feel like there's momentum here that Netflix is kind of moving towards a deal?
You know, I think that it's a smart move for them to look at the books of Warner. They lose nothing by doing the due diligence and looking at Warner's business model. I think Wall Street would be supportive of Netflix using its very valuable equity to buy the studios. I do not think Wall Street would be amused if they tried to buy the linear TV networks. And I think that, you know, I think there's a disagreement within Netflix. You're right that when I last saw you, Greg Peters was like, hard no, we don't want to look at these assets. Ted Sarando's body language on his earnings call was much more open, probably because he's the content guy. And Warner Brothers has some of the best IP and the deepest library of any studio. And once you own the IP, you never have to pay to rent it again. So it's really hard to keep creating brand new IP. You may as well get some that has an installed base of fandom from the last 50 years, and Warner Brothers has some of the most, next to the Walt Disney Company.
So, should Netflix do it?
I think it depends on price. Because it is contentious within Wall Street, it depends on price. And I get the sense that Warner Brothers really wants to sell dear because they have this idea that if they split in half, they're going to get $26, $27 a share of total value. I don't believe that. But if they believe that, then that means that they're going to try to overcharge Netflix. And
Hey, I left a comment on the information piece on this. Elon Musk says Tesla might unveil a flying car this year. This was my comment.
Bullish catalyst.
It's because that's why.
Everybody gets the inside scoop on what's happening at Warner Brothers because why not? You're competing against them. And then the price, and then they try to buy a piece, like Comcast tries to buy linear or Netflix tries to buy. And I'm not sure they are regulatably approvable, except.
Well, if you own the puts, you're cut put, right? Because you're down 95%, 98%, 99%. You're done. All of your money is gone. So I don't think, though, to be honest with you, most folks right now who are applying options are buying puts, in part because of the put-call ratio, right? The number of puts to calls is at the lowest level in, say, a decade. That means everyone's extremely bullish, which is fine as long as things are working out. It's the most optimistic people have been in a decade. You know, I want optimism, but also you have to remember, in options, 3 grand slams can be erased with 1 strikeout. So I'm going to share some of my rules of thumb, right? These are some of my rules of thumb. And really, everyone has to have rules when you invest, particularly when you trade something like options. It's not an asset. It's something that expires. It's a contract that has an expiration date. Remember.
Yeah.
Silver powers America's future. It's critical to our way of life in times of global chaos. Silver 47 Exploration is discovering silver and critical minerals to counter foreign dominance.
Sexual harassment and gender discrimination are real, and they happen.
Salary, but did receive payment as a consultant.
You know, the idea that Black Lives Matter Global Network Foundation received
time. I think he's, trailing badly in the polls, but refusing calls to drop out.
Bro! Dude, the Gemini image. Holy Christ. Bro! Oh, Google. Bro, calls on Google. Oh, that's nice. That's so much better than Grok or GPT. Damn, bro. I'm gonna have it redo it. Wow. Damn, bullish Google. Oh, man, that was hot. I like that a lot. I mean, that's not even close, man. Oh, yeah, that's nice. Oh, so much better. Let's put that into a thumbnail. That we can function with. Wow. Very nice. Okay. Anyway, where were we?
You've already seen Republicans make Mamdani the sort of poster child of the Democratic Party. Although he is popular here in very liberal New York, he's not popular even in the suburbs outside of New York. So I think they're going to try to elevate him. Having said that, should Cuomo, pull this off, I mean, he has his own issues. And so it's not as if, he would be the easiest face of the party either.
David Friedlander, thank you so much for the perspective and for the time.
Okay.
You bet.
So as of tomorrow, millions of Americans, including military families and veterans, are at risk of losing critical food assistance as the government shutdown continues. Next, we'll speak with a disabled Navy vet about how his family will be affected with SNAP benefits set to...
Okay. Next.
Those jets...
People are starving because, he's not going to face the voters again. He has, if reluctantly, acknowledged that the Constitution prohibits him from getting a third term. Meanwhile, Congress seems to have basically self-abdicated. There's this remarkable quote, I think, that Trump reportedly said, marveling that I'm basically the Speaker of the House and the President right now. And so who's to check him? Who's to stop him? Why does he care if the government isn't operating, since his part of the government is doing exactly what he wants it to do?
And you write this, I'm going to end it here. You talk about all these individual decisions, from South Korea giving him the Golden Crown, to Apple, Amazon giving him gifts, to law firms capitulating, or Congress members rolling over. They're all acting in their own self-interests. And you write this, hence the debacle of 2025. What looks rational for an individual has produced decisions of collective madness. All right, Susan Glasser, really good to have you. Always good to have you. Thanks for joining.
Very boring.
Uranium chips, which are their proprietary, what they call custom silicon. So they don't have a capacity problem. Whereas we hear from Microsoft and Llama over at Meta and Alphabet, they're all capacity constrained. That's silly. Amazon's running a better business. Good for them. Go Amazon. So they are not capacity constrained, and they have differentiation by these tranium chips. Let's move to Meta. Meta, the opposite. They're like, we're going to take all this money. They spent $19 billion of CapEx in the quarter.
Tell us you're short Meta without telling us you're short Meta.
Flow in the quarter, which means next quarter, when they spend more, they're going to go into negative cash flow, which means they're going to be borrowing money from capital markets. And when he tells you about what his goal is for this huge capital spending that's going to drive leverage, adding financial leverage to his income, his balance sheet, he's saying, we're going into the super intelligence business, which is going to benefit the world. And it's going to be, some experts see 3 to 5 years from now, some say 7, and some say after that. To which I say, too much value leakage. Yeah. Wall Street investors should not be in the business of buying Meta shares to benefit the world. The Pope does that. There are people who have a seat that does that. No, buy Alphabet. Everything they do is about capturing the value of the CapEx that they're building, both for themselves and leasing it to third parties at increasingly high margins. So I don't like the value leakage. I don't want to save the world through a corporate investment. get out of Meta, move into Alphabet, move into Amazon, and Apple's just not in the game.
Laura,
They
just
doubled their CapEx.
We only have 10 seconds left, but if Amazon's market cap is $2.65 trillion, excuse me. You say that
She's really excited about Meta. Okay, what is this? Trump lands at Palm Beach.
Okay. Happy Halloween and all of that. So we had an amazing trip. We had incredible meetings with President Xi of China. As you know, with the brilliant new Prime Minister of Japan, we just had a great time. And with the President of South Korea, we had an amazing journey. We also saw a lot of other countries. We brought back home with us trillions of dollars, many trillions of dollars. And our country's doing well. The shutdown proceeds because the Democrats just don't know what they're doing. I don't know what's wrong with them. They've never done a thing like this. They've become crazed lunatics. All they have to do is say, let's go, let's open up our country, and everything snaps back into shape. So there's something wrong with them.
Mr. President, are you going to meet with Democratic leadership?
I'm always going to meet. All they have to do is open up the country.
So
Let them open up the country, and we'll meet. We'll meet very quickly. But they have to open up the country. It's their fault. Everything is their fault. It's so easily solved. You know, we have a number of Democrats that have already voted for this. But the Republicans are very unified. They're very strong. And they want to do what's right for the country. They don't want to see trillions of dollars wasted on people that came into our country illegally, many from prisons and many from areas that you don't want to even know about. So we'd like to see this taken care of rapidly. You have a lot of, we have tremendous support, but it's not even support, it's common sense. Open up the country. Obamacare has turned out to be a disaster, as I've been saying for years. It can be fixed or redone. People don't get good health care, and their premiums go up every single year. So we should change it. It's a disaster. Obamacare is bad health care at a very high price. So
would you like to see a deal to extend?
Tonight we have a big celebration of Halloween, and I'll see you later. Thank you.
All right. Well, nothing there. Okay. That's that. That's Trump. Nothing interesting. Okay. So. Very interesting. I like how they put the flying helicopter here on the information's webpage. I can't help but think it's a pump right now for Amazon or Elon's stock plan. OpenAI potential IPO. NVIDIA to supply Samsung with 50,000 GPUs. Wow. An FDE boom. What's that? Is that foreign direct? What is this? FDE. The rise of black belt. Forward deployed engineers. To help big companies quickly get AI projects up and running and delivering value. Okay. Take Snowflake, who says they're experimenting with forward deployed engineers in AI projects to land several multi-million-dollar deals with customers. A lot of customers lack the in-house experience or expertise to get complex AI projects over the finish line. Yeah. So they're hiring more FDEs. AI black belts who can quickly help customers weave AI into operations. Ah, okay. Okay, interesting. All right. Let's see here. What do we got here? The battle for New York. Lol. Oh, I'd be curious to see what the Global Times are saying. Version of hands-on AI consultant, like solutions engineer. Oh, okay. That makes sense. More details about the Trump meeting. Let's see from the Chinese point of view. Okay. Not a lot of details. I'm just skimming this to see if there's anything interesting here, and there really isn't. Surprised. Boring. All right, well, that's boring. That's boring. You've got the 210 at 49. I've got oil low 60 still. Gold 40.20. 10 years unchanged 409. Okay. Democrats plot messaging ahead of Obamacare hikes. Should also see if there's anything else on the Fed, because there was a lot of Fed commentary we were looking at. Al Jazeera. Some bodies show signs of torture. Jeez, man. This is a terrible situation. Wall Street Journal. The shutdown pressure cooker when you've lost CNN. Social Security needs a new inflation calculator. Yeah, no kidding. Ah, U.S. judge orders U.S. to tap emergency funds for SNAP benefits. Well, that's huge. That just happened. Day before. Temporary restraining order. Directing USDA to use contingency funds to fund SNAP. Wow. That's great. 42 million Americans. So, let's see here. SNAP payments. And so they were set to expire tomorrow. Uh, 42 million poor and disabled Americans. Okay. Inside the heist, is there some new information here? Ocean's 11 brazenness? Yeah, it sounded awesome. Like they should make a movie out of it. Carefully chosen, right in the blind spots of the aging security cameras. Oh, smart. 2 men on the street, high-powered scooters. The other 2 men rode the lift with an angle grinder. High-pitched sound of an angle grinder sounding through the glass echoed through the hall. Moments later, a man in a yellow vest and a man in a motorcycle helmet climbed through the freshly cut opening in the balcony. They charged a group of display cases at the center of the hall. The glass is designed to withstand bullets, according to museum officials. Wow. But they quickly gave way to angle grinders. Lol. Carve hand-sized holes into the glass. An alarm sounded in the command post the moment they entered the gallery. Police were on their way, and unarmed security guards were hustling visitors to the exits. Oops. They moved to escape about 4 minutes in. In their haste, they dropped several pieces of jewelry on the floor. One thief paused to pick up some jewels, but left one behind, along with a glove. The lift was waiting. The thief with the yellow vest stepped from the Louvre balcony window onto the lift's nest-like platform. Appeared to be in such a hurry that he dived headfirst into the platform. Wow. The lift gradually made its way down. On the ground, the team began dousing the truck with gasoline. Jeez. Police arrived right as they were attempting to set the vehicle on fire. No way. To bury evidence. Sped off along the banks of the Seine. Transferred to other vehicles. Yep, that's what we predicted. Parked some distance away. And then drove east. Jerry can, blowtorch, angle grinders, walkie-talkies, yellow vests. Wow, they left a lot. That's sloppy, man. Swabbed for DNA, fingerprints. 2 matches quickly came. Dude, they from criminal databases. Wow. Previously convicted on a smaller scale theft. And another was convicted of theft of ramming ATMs for cash. Wow. People are dumb for leaving behind so much of this evidence. Oh, man. And the fact that one went to Charles de Gaulle is insane. Like, why did you not drive to Spain or something? It's crazy to me. Yeah. To try to flee the capital shows a lack of experience. Not the best way to get out of an investigative environment. No shit. Exactly. Borderless European Union and take a flight from somewhere else. Totally agree. Total morons, dude. Thanks for letting us know how to do it right the first time. I mean, anybody could have thought about that. Kind of crazy. That's not too many more details, though. I was hoping for more. Is the market slipping a bit? Well, Tesla's not. Well, the Qs are fine, too. Oh, look at that 630 line! Oh, man! Let's see here. Yeah. Okay. Let's see what we got over here.
Portraying her country in the United States and others in the region as part of a continuum.
I'm curious, too, though, after she got the Nobel Peace Prize, I mean, of course, President Trump was hoping to get it. What is the communication between the two?
Boring. Nothing.
No surprises, and installation is on your schedule.
Call or visit EmpireToday.com and get the home floor advantage.
Oh, we're already on MSNBC. Oh, no, we're on MSNBC. Oh, so similar, the logo.
Well, the Roomba probably knows your house, too. Very quickly, I'm about to be a year in on Waymo. I'm not as advanced as you, Joanna, but took Waymos in L.A. I was in a couple
are they
Waymos
interviewing
yesterday.
Joanna?
I posted some videos. All due respect to all the taxi and Uber drivers and Lyft drivers out there, That's my video from last night. I've got my Grateful Dead playing. I got to choose my music. This felt like the future of transportation to me. What's the Waymo and robotic car opportunity here?
Look, a lot of what we're talking about with the humanoids is actually where self-driving cars has been. They needed Waymo many years ago, starting actually in 2010, started training their cars on driving video. Tesla's been doing it. Waymo's doing it. Zoox is doing it, owned by Amazon. This is where it's going. And we're seeing it now happen. You're seeing it in your experience last night. Holy crap, right? You're like, wow, this drives really well. There's a lot of benefits to it. And that's the training that had to happen over a long period of time with a lot of safety in mind. Yeah. Similar thing in home robotics. But as I told the CEO, it has to happen in your really private space, which is
that's interesting. Yeah, it is. And the robots, it's not just like Siri or Alexa sort of semi-listening. It's a...
Next.
Treating mild Alzheimer's patients with its patented neurostimulation technology. In fact, the results were published in a prestigious medical journal. The study showed that Nexcelin,
called the Law Brothers.
After your car accident, stop.
Think, man.
Don't say.
This is a bunch of crap.
Are far from foolproof, not only in assessing where a threat may come from, but also in actively destroying that threat. How concerned should we be about that? Is that something that keeps you?
Not concerned.
Watching Bloomberg Business Week Daily. We'll be right back.
Boring. Fine then. All right. So let's see here. Fed. The Fed chorus comes out against latest cuts. Yeah, that's what we're going to have to talk about. And then what is this? PewDiePie says stop using AI right now. What's his argument?
And I know what you're thinking. Felix, did you consumption? Legit. And it's been... So, without further ado, what model can I run on this thing? Well, I asked AI itself. I went straight to the source. I was like, what model can I run? There goes that on me. And I had given it to my own AI with the RAG capabilities, which is fast retrieval of data locally on your computer.
Sorry. Bored. Patience very low. Okay. Things will get worse. Okay, what is this?
Congressman Brian Babbitt, member of the House Transportation Committee, joins me now. Great to see you, Congressman. Thanksgiving, it's just a couple of weeks away, Congressman. Democrats are clearly now getting the blame for using the shutdown as political leverage, their own word. Could the shutdown end soon because of all this pressure, even before Thanksgiving?
David, I don't see how they can that they couldn't succumb to this type of pressure from their own side, from the unions. The airlines have just called for it. I mean, I think here we have a Halloween day today. I think the scariest thing in the United States today on Halloween is that the Senate Democrats just simply refuse to do the right thing and open this government back up. And I agree with Governor Sununu. I think things are going to get worse, much worse. We've got the air traffic controllers. We've got a lot of first responders. I mean, these Democrats want to go. They want to turn the clock back. And go back to open borders, transgender men and women's sports. They want to have cashless bail. They didn't win the election. They lost in an electoral college landslide. And so we've got to move forward, and they are not allowing Trump to do what he needs to do, or us, the Republican Party in the Congress.
The president has suggested ending the filibuster, at least for this narrow purpose, to keep the government open. On the other hand, we saw the unions going against him, not only the Teamsters, but also the Government Workers Union, which is about 95% Democrat. 800,000 of them said that the Democrats should end the shutdown, signed the CR. And now the four largest U.S. airlines, United, American, Delta, Southwest, they're all calling for Dems to vote for a clean CR. I just can't see how they could avoid it. I mean, they clearly own this shutdown now.
it's so obvious. It really is. I mean, to play down what Trump just did over in Asia with the Chinese, to talk about how he got played, he was taken in, and the guy is out there doing billion-dollar deals, trillion-dollar deals.
Trillions.
And doing the best that he possibly can. I've never seen a president work this fast. And for them to pretend that nothing is happening good, and they are the ones that are keeping the government shut down. I think the American people know this. They see this. I think they will pay a price at the polls. I really do.
Well, Congressman, I only got about.
Yeah, we'll see about that. All right, there's nothing news in this. This is stupid. What is this? Trump unloads on Powell after Fed rate cut. Is that true? Trump unloads on Powell after Fed rate cut. Let's see it.
6 months of gains.
She counted the old-fashioned way.
Got my.
Not because of it.
Energy prices are down. Gasoline prices are down. Grocery prices are down. Mortgage rates are down, despite the fact that we have an incompetent head of the Fed. He's incompetent. I call him Jerome Too Late. He's always too late. Jerome Too Late Powell. But he's out of there in another couple of months. We'll be very happy about that. We're not going to have a Fed that's going to raise interest rates because they're worried about inflation in 3 years from now or something.
Poor little too late. But here's the big picture. The decision today may set up one more cut before Christmas. And with the markets at all-time highs, the White House is betting cheaper borrowing means more spending, more building, more momentum heading into 2026. So for too late, Mr. Powell, it's better late than never. And that's what the market seems to be broadcasting today. It wants its rate cut, Charles Payne. It wants it now.
Yeah, listen, it did pretty good under restrictive policy. So imagine with accommodative policy. Listen, I'm really more optimistic about this for small businesses, for mortgage rates, for the average American, for credit card bills, which are now 24% to go, maybe back under 20%. I'm looking at this as a cut from Main Street more so than Wall Street. Look at the stock market, and then just start getting hot just now. Right. This is the fourth year of the rally. So this means it began the rally under restrictive rates. So this whole myth that, hey, if you cut, stocks are going to go up. Stocks, gold, bonds, money markets, everything did extraordinarily well. And the wealthiest people in this country became extraordinarily richer, even more rich, maybe the richest they've ever been compared to the rest of the nation under restrictive policy. We need this from Main Street.
Yeah, and that is true about the markets and the surge that we've been following on this program, but all across the network as well. And Brian, when it comes to rate cuts, I typically want to see a balance point. Where, savers can benefit, the market can benefit. It's like there is a Goldilocks point for rates. We are higher probably, and so I think there is room to come down. I think sometimes when the president is joking about how far we should go, it might be too much. I don't want to see interest rates at zero again forever because that's not sustainable. But he's got room here, and I think that's what, Charles is pointing out. It will help Main Street.
Yeah, I've been thinking about that a lot with all the jobs data because we had the conversation yesterday. We were talking about UPS jobs cuts, and that's kind of been this rolling. We're going to talk about it today as well. And I'm thinking about these small businesses who are not getting, and disagree with me, Charles, if you think this is not true. I don't think they're getting the AI.
Okay. All right, somewhat boring here. This was a mistake. Kudlow calls out Fed cut.
The bid here.
About how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Okay, Fed Chair Jerome Powell throwing some cold water on investor hopes for more rate cuts this year, saying the board was deeply divided on how to proceed. But the central bank did cut on Wednesday, bringing interest rates below 4% for the first time since 2022. All right, Larry, you can go anywhere you want to go on this. What happened yesterday, what it means for markets, what the future holds when Jay Powell doesn't have that job. Dealer's choice.
Well, I don't necessarily disagree with what I think he said, that we don't know about December. We don't know about December because we don't know about September or October. or November for that matter. There's a dearth of information that presumably the Fed uses. I mean, we know what markets are saying. The Atlanta Fed is saying 3.9 in the third quarter, ending in September. I hope he's not making that decision just because it looks like the economy is strong. The Fed has a phobia about growth.
Yeah.
Growth does not cause inflation. It does not. On the other hand, the last CPI we got was not a fabulous. I know it was below the street and triggered a rally. But the 3-month change for both the top line and the core was 3.6% at an annual rate with a target of 2. And the 12-month change was 3.0 for both with a target of 2. So in that sense, I'm not completely at loggerheads. We need now. Energy prices seem to be coming down. Gasoline prices seem to be coming down. Shelter prices seem to be coming down. So by the time we get to December, if we have good information, it may be time to cut again. Okay, inflation will be a lot lower. But I'm just saying
But
right now, I'm not crazed over it.
He also knows that when he speaks, markets react. They reacted yesterday. In the Urban Dictionary, they have this word, flexing. I think he was flexing his power, still saying, I'm in charge here, letting Trump know that, letting the market know that. He could have just sat on this uncertainty and done whatever they're going to do in December. If they get more data and things change, they can do that. He didn't have to say what he said yesterday.
Lawrence thinks he might have been inadvertent. It was a response to a question, wasn't it? Mm-hmm. He kind of popped it out. So we're polling the next Fed chair, because we need a new Fed chair. And I'm just going to quickly, the Twitter X, we're polling on Twitter X and Instagram, many more votes on Twitter X. The leading candidate, according to this so far, is Kevin Warsh.
Okay.
Number two actually was me in a write-in.
Hey,
All right.
Let's talk about that.
Number 3.
Okay. What else? So then we have WAPO. Venezuela pleads with Moscow for help. Wow. Yeah, not a surprise because people see anyone fighting the U.S. as an opportunity to basically align with them. So this is why China's aligning with Russia. Not a surprise now Maduro wants to align with Russia. That's not a surprise. Okay. JP Morgan flagged Jeffrey Epstein's suspicions in 2002. Little changed. Yeah, not a surprise either. Huh. Cracks in the credit market could be a warning for Wall Street. Well, yeah. Oh, yeah, we should summarize what's going on with that construction deal. Because that still seems sus. Yeah. Okay. So let's view that. That is not here. We will find that it is not here. Although we'll talk about the Fed here. Oh, of course. Let's see. Okay, perfect. So one of the biggest risks in markets today, private credit. And there are some alarming things happening, including a sudden collapse of a BlackRock-backed home renovation company. Talk about that. But first, look at the front page of Bloomberg. global money markets are flashing signals that liquidity is drying up. And cracks in credit market could be a warning for Wall Street. Take a look at some of these articles. Pockets of global money markets are coming under strain as central banks have been pulling back on easy money policies just as governments boost debt issuance. People go, oh, but there's so much money in money markets. But a lot of that is hosted by trillion-dollar companies like an Nvidia or Apple, basically where they park their money before paying their bills. So it's not exactly money that's available to flow into, say, the stock market. Then, of course, we got how many cockroaches does it take to sink a ship? We may soon find out. That's in part because this morning we even broke down the insane circular financing of Carvana, which could literally on its own take down a portion of the subprime autos and lending market in the stock market, which could, of course, then reverberate through the rest of the stock market. But now we get this sudden reporting that a Wall Street-backed roll-up of many different construction companies just literally went bankrupt, and the bankruptcy filing hasn't even come out yet. We're just getting emails and reports that this company has just ceased operations. Websites are being closed and shuttered. I mean, look at this. One of the roll-ups is Reborn Cabinets. You go to click on it to go to the website, gone. Website's just literally deleted. Dream Style Remodeling, another one, click on it, website can't be reached. How about Minnesota Rusko? Well, you can see here, Dear Minnesota, it's with heavy hearts we regrettably inform you that Minnesota Rusko, a Renovo Home Partners company, has ceased all operations. That got indexed by Google, and then here you see after 70 years they close. But if I go click on the website, nothing. Oh, wait. Yep, nope, no response. Blank screen. The domain loads under Dear Minnesota, but nothing else. And so take a look at this. Ooh, gotta unmute it.
For projects that are now in limbo.
Brett Hoffland's been looking into what you can do now to protect your money.
Well, this has been a shock for many in the community. You can see the doors here at their New Hope office are locked. Parking lot is empty, and there's just a small statement posted on the Minnesota Rusko website. Now, if you're someone who has a project that's coming up, maybe the project
BlackRock backed, mind you.
There's a good chance you could be getting some money back.
We've put a lot into the house.
At Pam Henning's Blaine home, she picked Minnesota Rusko to help with major changes to the bathroom.
I made a payment when we signed the contract, and then for other reasons, we had to pay the rest.
I'm assuming we're talking about thousands of dollars here?
A lot of, yes.
But Thursday, she and other customers were left with a brief statement on the company's website announcing Minnesota Rusko has ceased all operations.
Do you know how
So that's them at Minnesota Rusko. Let's go take a look at this. Here's another, here's just another reporting of the same company.
Fox 9 about their experience with Minnesota Rusko. Story first came down, we hadn't heard.
Tuesday morning from Renovo Home Service.
The parent company, Renovo, has also filed for bankruptcy as of Wednesday morning. Still not finding the actual bankruptcy filings, though, because we're looking for these bankruptcy filings. But understand this for a moment. This company, Renovo Home Partners, apparently all of the subsidiaries just went BK, apparently backed by BlackRock TCP. Now, BlackRock TCP is a public company under ticker symbol TCPC. It has a 17% dividend, but the company's been losing money for its shareholders, at least based on the assets that it's bought and its year-to-date performance. Year-to-date, even though it's got that 17% dividend, the stock is down 35%. And when you look at the financials for this BlackRock fund, look at some of this. They have $1.7 billion in total investments that apparently they paid $1.96 billion for, which means this BlackRock fund is actually upside down. They're so upside down that they waived $1.8 million in their management fees. So they've prevented collecting management fees on this BlackRock fund because they're losing money, presumably. I mean, we could see they're upside down on their investments. They're down 35% in the stock. So something's weird is going on in this sort of BlackRock fund here. But here's a BlackRock fund that I worry about as having been propped up to sort of, oh, let's just move all the crappy assets over to this separate BlackRock fund And now we're starting to see individual components of it collapse, like this home renovation company. So this is kind of scary. I mean, take a look at this. Here's a Reborn Cabinets subsidiary email. Reborn Cabinets. Dear team member, we regret to inform you that Reborn Cabinets has made the very difficult decision to immediately cease business operations, resulting in the termination of your employment effective today, October 29th. That was on Wednesday. And the company intends to continue to paying company-sponsored health through the end of the month, which is, now through Halloween, which is today. So all of a sudden, you're seeing this collapse of more and more of these quote-unquote cockroaches. Look at the different brands involved here. Affected brands include New Pro, Minnesota Rusco, Dream Style Remodeling, Reborn Cabinets, Allure Home Improvements, Remodel USA, and Woodbridge. Local reporting from Minnesota and Massachusetts, as well as other markets, showed darkened offices, crews that stopped arriving at job sites, and customers saying large deposits had vanished. It's kind of wild. So what you're seeing are these massive roll-ups in private equity that are starting to fall apart. This comes after the collapse of Tricolor, after the collapse of First Brands, after BlackRock loses $1 billion due to fraud to Broadband Telecom and Bridgevoice, and now you're seeing the circular financing at Carvana get attention, and the collapse of this component of BlackRock's TCP Capital Corp. It starts making you scratch your head. Damn, man, how many cockroaches are there? It's scary because now it makes you wonder, hey, is this going to start reverberating through the entire stock market? I always like looking at Jefferies and some of the banks for this. So if we look at Jefferies obviously got hit after the announcement over here of the Tricolor and First Brands hit. Jefferies gets hit hard. They've started recovering a little bit, but now they've even started selling off since then. If we go look at JP Morgan, which is another one who took hits, they've almost recovered entirely. They bounced off their 100-day moving average. So far, the market doesn't really care about these red flags in private credit. But it does make you start wondering, are we going to see some of this spread? And how many more bankruptcies are there going to be? That's the big question. So we'll see. But this is one that I'm paying attention to. This is a lot of shutdowns of businesses over here. And that BlackRock feeder fund makes me nervous. So, if I had to put it together, I guess the way to put this is, Renovo Home Partners suddenly ceasing all operations and going bankrupt on all of these rolled up home renovation companies is really just another symptom of even a BlackRock supported company going bankrupt, which is a red flag that private credit might actually be a lot more sensitive than we think. And it's just a matter of time for this to start reverberating across the entire financial sector, especially large banks. We already know, based on the IMF report, that lending to these non-bank private lenders who then give money to companies that are now going bankrupt has been supported 90% by large banks in America. So when the International Monetary Fund is telling us, hey, be careful, big banks are throwing money at these private credit funds, and now the internals of the private credit funds are starting to fall apart and go bankrupt. These are all early canaries. Tricolor goes bankrupt. First Brand goes bankrupt. BlackRock takes $1 billion loss from fraud at Bridgevoice and Broadband Telecom, both companies that just went bankrupt. And apparently the auditors aren't flagging any of these issues. The circular financing problems at Carvana plus now Blackwater TCP Capital Group that supported the funding for Roscoe Home Renovations, major home renovations brand in America, going bankrupt essentially what seemed like overnight. It's starting to get scary in private credit. Wild.
Yeah, the AI transformation at GoDaddy really has three components. And let's start with the internal, like you said. Internally at GoDaddy, what we're really focused on are two pieces. One is generative AI, and the other is agentic AI. on generative AI, an example is, how we write code and using AI tools to write code. Well, we set a target for ourselves that by the end of this year, we wanted 70% of the code to be AI generated. So we wrote a tool that objectively calculates whether the code was written by AI or by a human. So nobody gets to sort of decide, the tool decides. This month, we are over 45%. So we're making very, very good progress in terms of generative AI. But what that allows us to do is to take a step back and look at the entire product lifecycle and say, beyond generative AI, how can we use agents to make every part of the process faster and really, really reduce cycle time? And that's going to allow us to bring products to market much, much faster, experiment with more ideas, have more shots on goal. I mean, a couple of the data points I shared that we launched a new Aero app builder. This is a vibe coding tool using generative AI. In that tool, 90% of the code is AI generated, 90%, 90.
Yeah, but a lot of that is just like autocomplete. Like the new stuff, the novel code is what you need good developers for.
In the past, it would never get prioritized because it'd be a relatively small project. But now, given the power of
Bro, Symbotic now almost $82. That's crazy. Oh, we've been pitching this since $20 in the Course Member Live. That's amazing.
Was written by AI. That's just fantastic.
Give me an example of sort of how this stands to change the way things work externally. So I think of myself. I wisely bought davidgura.com, but have done very little with it because I just don't have the bandwidth or time to do that. I imagine that AI is going to be able to build the whole thing for me at some point. Perhaps that's what I'm waiting for. But stepping back from me and my selfish reasons here, if I'm a company wanting to use AI through GoDaddy to kind of expand my business profile, what are you able to do? Give us a few sort of novel features.
So within a few weeks, and you can try it today too, but I feel very confident when we get out of beta on Aero.ai, I will be pinging you, and we will take your idea and build it, and AI will build it for you. In fact, my chief strategy officer, while we waited for the earnings call yesterday, said, you know what, I'd like to build an app to track my candy consumption. He's a big eater of sweets. And he just sat there and he used Aero.ai. There's a custom app builder in it. And he said, oh, I want a sweet tracker. Well, I want a nicer name. Oh, I want analytics. And the AI just kept creating page after page. And it's not just a prototype. He can literally go in and put in a custom suite and say, this is the suite I ate. And the site, the AI gives him all the categorization. It even adds the number.
I'm bored. I'm going to go get ready for Halloween. All right. I'll see you in the next one, my friends. Goodbye. Good luck out there. Go check out Reinvest and househack.com. Read the solicitation. Offering circular.